Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to another live stream. Hope you're doing well. I'm going to play you guys some intro music. Hold on. I have this little soundboard in front of me. And there we go. Happy Thursday, everybody. We've got... Okay, actually, something just happened. Hold on. We had... something happened with the euro here this morning. Yes, it did. We had the refinancing rate come down to 3.65% for the ECB. That is a rate cut. And let's see the reaction. Basically, no reaction. So why would that not cause a reaction? What the heck? They cut rates and the market didn't move? Remember that the market is ever looking forward. It is always trying to figure out what's going to happen next. I got some crazy hair today. All right, let me fix that. There you go. The market is always looking forward. It's always looking at what's coming next. So the market fully expected already the ECB, the European Central Bank, to cut its borrowing costs or its refinancing rate or its interest rate, all fancy ways of saying the same thing. And so we see the reaction here, basically a blip up, but no real lasting movement either direction. And we are coming in here to some pretty big news here this week. Arguably the last key data point before the Fed meeting next week. And the question is, are we going to get a 50 or 25 basis point cut next week? And I'll go ahead and spill the beans. I think it's going to be a 25 basis point cut. If it is 50, it would be a very big shocker. And if it's 50, the dollar index would definitely, in my view, take out the lows. I'd be very, if it didn't take out the lows on a 50 basis point cut, I would be selling it because I think it probably would. I don't think that's going to happen, though. I don't think we're going to get a 50 basis point cut next week. I think we're going to get a 25 basis point cut. I think that the stock market is in a decently okay position. I've been cautious for the last 2 weeks, which was feeling really smart. And now I'm not feeling so smart about it because, again, the market has come all the way back. So if you're a regular, then you know that I had this is my stop loss trailed. My initial entry on my SPX trade was here. So I took longs. I went long on this big pullback that we saw in mid-August. Market rallied and I trailed a stop loss just below this low. Then when price broke to the downside, I stopped out. And for a little bit there, I felt really smart because I was like, oh, look, I stopped out. I took profits before the market, tanked. The market snapped back here the last few days. Jobs data came out. It was mixed. But then yesterday's CPI data, I would argue was pretty good for the stock market. A 2.5% inflation read is not bad at all because inflation being at 2.5%, remember the Fed's target is to get to 2. Do you remember where we were at a little while ago? I mean, not a little while ago, but in recent years, we went up to 9%. Okay. So we went 9% down to 2.5%, which is not nearly as threatening as 9. Inflation, remember, prices were rising on a year-over-year basis at an index level by 9%. And I know you all feel just like I do when we see that 9% number. We feel a little gaslit when we went to the grocery store. Prices were not going up 9%. Prices were going up in food prices. They were going up like 20+% for many items. So 9%, remember, is like the index. It's like the CPI, which baskets all sorts of different, products, services, goods, etc. The point is, inflation was going crazy. Inflation has cooled off tremendously. And that sets us up for a good scenario in the stock market. However, Nick, are you starting to get bullish again? Well, I'm always a little bullish. I'm always a little bit of a perma bull when it comes to stocks. I do love investing in great companies, but September still has some headwinds to it, guys. And I'm going to stick to my guns here. I don't have an entry signal on the Edgefinder's top setups currently for indices. So there's nothing I can really do on setups there. If anything, we're still getting a bearish reading on the Nikkei, which is the Japanese stock market, which I tried shorting, ended up not going so well. And if I take a look here at seasonality, this is what I wanted to get to. Seasonality, take a look at the SPX500. This is what I keep coming back to, guys. I'm just a bit cautious during this month, which is historically and seasonally a rough month for stocks. Sorry, I've got a coffee mug. I don't know if you guys can see this. It's got a little bit of a, like I can keep it warm because typically when I do these live streams, if I have coffee, it goes cold because I'm not drinking it fast enough. Anyways, this is my cautionary tale for September. We have an election around the corner. It is now up in the air who's going to win the election. In my view, I really don't know. And that uncertainty, just like it makes other market participants nervous, makes me a little nervous because I'm thinking, well, if Kamala Harris becomes president or Donald Trump becomes president, each one of those has differences in what it could do to the economy. Now, hold your horses. Don't get all upset with me. But generally speaking, each one of these presidents has different policies that could impact the markets positively or negatively. And don't worry, I'm not a doomer that's going to say if X is president, the world's going to collapse. And if the other person's president, the world's going to be great. I actually think that the economy itself could do fine under both. Who becomes the president, honestly, does not really impact my view on the financial markets all that much. On specific sectors and ETFs that I'm watching, it certainly can. If we get something, let's just give a quick, really simple example. If Kamala Harris becomes president, I may look to watch closer the solar panel world. Actually take a look at this. So with the debate, which arguably went a little bit better for Kamala Harris than people thought. Even if you think Trump did better, I don't care. I'm not here to debate it. And regardless of your thoughts, the market is speaking here. The market said Kamala Harris did better than people thought. Let's at least say that. And again, without getting into politics, the reason I bring this up is that we can see how it impacts specific markets within the market. Take a look at solar panels. TAN, which is an ETF that tracks several different solar companies, rocketed following the debate. So this is an area that if there is a president, if we see Kamala Harris become president, TAN might be one that I look, to go long. It's a clean energy kind of concept. So there's some trades there. And vice versa. If Trump becomes president, complete reversal, right? May be way more inclined to massively produce more oil, which could, and perhaps take some of the tax breaks away from some of the more clean energy stuff, which again, regardless of your thoughts on that, it's trades that can be watched for in the markets. On an overall kind of basis, I don't think that the market crashes or rips on either president. I think it's more about the state of the economy as the Fed cuts rates. Frank 2024, I say. Frank is my right-hand man. He comes on the show pretty often. So, yeah, we will see. The election will be a story that, unfortunately, I will have to talk a lot about in the coming months. It's not something I look forward to, and I really am not I'm not super into the politics stuff unless it impacts the markets, which let me actually say something on this. It impacts the markets a whole lot less than people think. The president is not as important to the financial markets as the one and only Jerome Powell, right? He manages the cash machine. He dictates with his team what happens to the money supply. It's way more important to the market. Anyways, let's move on from that horrendous subject for a second. Let's talk about the dollar. As we go into this data point, I don't know which one's more important, guys, unemployment claims or the producer price index. I'm going to argue that the unemployment claims might be more important. So we've got about 2.5 minutes to go. What are we looking for here? If you're somebody watching the dollar, you want unemployment claims to be low if you're bullish, high if you're bearish. So if you want gold to go up, you probably want claims to be ugly, meaning higher than expected. Stock market would also not love if claims are higher than expected. On the inflation front, yesterday the market really cheered cool inflation. So that's telling you from a trader's perspective, cool inflation is what the market wants to see. So they want to see this number come in not threatening. In fact, while we've got about 2 minutes to go, let's take a look here. Economic calendar. We'll go to here. I want to see what I'm looking for specifically, guys, is I want to see the producer price index year over year. So we're forecasting for 1.8. Previously was 2.2. So we've really reeled in the inflation expectations here. We get that figure in just a few minutes. But, I'm sorry. I read the wrong one. Well, actually, no, I didn't. Here's the headline, but it's actually showing a red folder here, a red event, if you will, for the core producer price index. So clearly this is one that the market is watching very closely. We're expecting a 2.5% reading on the core producer price index, which is removing food and energy from the picture, which are the more volatile components of most inflation readings. So what I'm going to do here, guys, we've got about 1 minute. I'm going to switch over to the all markets view. As you guys may know, if you watch every day, this is something we do every single event. We've got the stock market here, S&P 500, NASDAQ, Dow, dollars right here. You got the pound here, euro here. Gold is on the top right, which gold trade going pretty well here. Let's see if we can get a breakout today. And oil bottom right. So we've got about 30 seconds to go here, and we'll see what the core PPI / unemployment claims will do to the markets here today. Got our breaking news coming in. All right. Should see Market makes some kind of move any moment now as we wait for the claims data, jobs data, and inflation data coming at the same time. Let's see what we get. All right. Got the dollar index slightly lower. Gold shot up, then came back down. Euro and the pound taking on a little heat here. Let's take a look here what we've got. Somebody in the chat said core PPI came in at 0.3%. Numbers already out on FX Street, so let's take a look here. All right, so producer price index core PPI on a year-over-year basis did come down to 2.4%. That was better than expected. Not bad. Okay, so that's a positive for the market, negative for the dollar. Jobless claims came in at, consensus was 230,000. We got 230,000, so kind of a non-report there. What's going on, Forex Factory? Where are you at today? You got to wake up. There it is. So 230,000 unemployment claims, so pretty much as expected. So this is let's just take that out of the picture because that's kind of unimportant. Month over month PPI was higher than expected. They revised the previous down from what? 0.1? Revised from 0.1. Core PPI higher than expected month over month and revised lower to 0%. All right. Let's go take a look at some individual charts, see if we can make anything out of this. I want to take a look selfishly first at gold because it's something I've got a long position on. Come on, gold. Today's the day. Did you guys see my meme on, well, I put out a meme, but it wasn't me. It was my wonderful editor, Chandler, put together an amazing SpongeBob meme yesterday. It's like the day 5, day 15 SpongeBob ringing the bell one. You guys, if you have not seen it, you can follow me on Instagram. It's one of my latest posts. Chandler put that together. I thought it was really funny. It was from yesterday's stream where we've been talking about, and I got to say it again, gold is going on day 20. Day 21. Day 21 of not breaking out either direction, up or down. And what we see here is prices right back to the top. I've got this gold position on. I've been sitting in this gold position since they invented gravity. That's how long it feels. I'm just kidding. They never invented gravity. There's that one, there's that infamous Trisha Paytas moment where she's like, she asks like who invented gravity or something like that, as if it, anyways. Is this news bullish or bearish for the stock market? Burns, that's a good question. I'm going to try and figure it out myself here in just a second. So gold, I'm just going to do gold really quick. I mean, I wish I had sold some calls against my position here. I would have made some nice premium waiting on this thing to do nothing. But that's not really something I do in my momentum strategy. But man, it doesn't feel like there's a whole lot of momentum in gold right now. Doesn't feel like there's bearishness in gold, but there also just does not feel like there is some follow through to the upside on gold just yet. I want to state that when it comes to gold, I am confidently neutral. I have a long position. I take a stop out if it comes all the way back. But if we break through these highs, I can finally trail my stop loss. And when I look at the 4-hour chart, there is some structure here that makes a lot of sense for me to trail stops on if and only if we can get a stinking break above the all-time high. So if we get something like this, right? We get a break here. Wonderful. I can finally take this stop loss that's all the way down here and I can move it into profit. And that's probably what I will do. If we get a big close today, then I can finally lock in some gains on this gold position that I've been sitting in for a minute. So let's talk about the stock market for a second. So, Burns just asked in the chat, is this news bullish or bearish for the stock market? Well, let's just kind of summarize it Really simply, jobs data. Was it good or bad? It was neutral, right? Because claims came in about as expected. So market's like, whatever. PPI, better or worse than expected? Why is it neutral? Neutral because it's neutral because, look, month over month, it was higher than expected. Year over year, it's lower than expected. We just put our hands like this. I can't fit fully on the screen. Put our hands like this and we say, look, it's kind of a washout. That being said, guys, yesterday's data point was similar and the market ripped. I'm actually going to go out on a limb here and say I don't want this to happen because I'm not in it, but I think the S&P 500 is going to like this. We're at 2.4. Inflation seems completely beaten for now. The beast has gone to sleep again. It's like the dragon has gone back to its lair. That is inflation. And so, the way I'm seeing this, and I'm thinking, okay, inflation's not a problem. And when something kind of just takes a back seat, the stock market in that environment, if problems just take a back seat, stock market usually, from my experience, starts to drift higher. The stock market is kind of like the VIX in reverse. The VIX demands for it to go up a lot. It demands escalating fear. The VIX doesn't just go up and drift up. It rarely drifts up. The VIX, which is the volatility index, which tracks options activity and basically gives us a reading of fear or greed in the market. The VIX shooting up requires escalating fear. The stock market to go down requires escalating fear. So today's data, I'm going to argue, even though I'm cautious on the stock market right now, neutral readings kind of lean in favor of the bulls because we've got rate cuts around the corner. So here I am. I'm not in a bunch of long positions on the index. I'm just pointing out the way I see it today. PPI, not threatening. CPI yesterday, arguably good. Unemployment claims today, good enough, right? Not bad. Remember, for the stock market to go down, you need escalating fear. For the stock market to go up, you need things to be chill. That's why if you're right about bearish moves in the stock market, you can make a lot of money very quickly because fear can make really quick movements, and really quick movements can make you a lot of money. So where am I at? I'm just staying neutral on the stock market. So I have a bullish bias. Come on, gold. Can you do it today? If you tease me one more time, if gold teases me one more time by going up to this area and then closing down in the middle of this range today, I don't know if I can handle it, guys. I don't know. Here's what I want to see. I want to see, let's try and coerce gold into going higher by playing a hype song. Okay? Come on. Come on, gold. Come on. I'm being ridiculous. We know the market does not give any amount of emphasis on what we are individually wanting or needing, or it doesn't even care about our stop losses. It doesn't care about any of that. I'm just being an idiot. But I would really like to see gold make a move. At this point, guys, I don't even care. If gold wants to break down and stop me out and start trending again, I would accept that almost, because I've been sitting in this and my gold trade's not even a big trade. On my account, it's not a big position. That being said, I would prefer it to go up. Too early for this. What we need is a perfect candle.
Perfect candle. That green candle.
Frank's notorious perfect candle moment was when we were talking about a candle that looked kind of like this one, where it was just a green beast mode candle and Frank and I were both long, and he said like perfect candle. So
Perfect candle. That
it's
green
one of my
candle right there.
it's one of my favorite sounds on the soundboard. Anyways, Nasdaq's flat here. S&P. So yesterday was a big win for the stock market, and I was pissed off about it. I'm not gonna lie, because here I am feeling like a hero that I stopped out of my S&P longs. Market drops for days, and I'm feeling like, okay, we got a beautiful, situation here where I'm in cash and I'm feeling like a villain because everybody else is getting hit. Yesterday on stream, I bragged about how I was flat on the day when everyone else during this period of this wick lower, everybody who's long indices or long stocks was getting crushed. I was flat yesterday. So I was bragging about that yesterday. I think the market heard me and decided to punish me. I'm just kidding. But anyways, we stay patient on this. I don't have a reason to get long the indices. I keep saying it, but I'm confidently staying on the sidelines, being patient. What do we have confidence to place trades on? Well, for me, it comes down to this list here. I'd like to look at dollar CAD, and I'd like to check in on the Nikkei. So the Nikkei I stopped out of, unfortunately. Well, I mean, fortunately, it didn't hold the level I thought it would. Unfortunately, I wish I would have shorted it again right here like I wanted to, but I wasn't looking at it at that time. But if we start seeing, rollover effect, that may take another stab. So I'll keep an eye on the Nikkei. I liked this short setup when I took it. Honestly, so if this is your first stream or you're just tuning in, I shorted the Nikkei right here. I put a stop loss like here. When we rolled over, because I like to trail stops very tight when I'm short selling the indices, I put my stop loss there. So to be fair, it was a tiny loss, but a loss nonetheless. What I was looking for was continued rollover. We saw this market move lower, and I was like, okay, we are feeling like a hero today, and then market ripped. So it is what it is. I'm still cash heavy. I'm still waiting on the sidelines for the indices to make a potential bigger sell-off move. If they don't, they don't. And I just move on with my life and I find the setup when I get confirmation. But currently, the Nikkei is not really a setup for me at this time. I'm watching it. Let's take a look at dollar CAD. Dollar CAD is a new setup on the Edge Finder. So dollar CAD, potential bullish setups. So I like this on the 4-hour chart quite a bit. So got a nice level of support here, right? We've got a support level here. We've got a support zone, generally speaking here. A little bit cautious on the daily chart because we have some resistance overhead. We saw this here, this resistance point come into play again. That being said, though, I kind of still like the risk to reward on this. And I think that dollar CAD might be a play here at some point. Oh, come on, gold. Gold's up 0.67. Let's do it. Let's see it happen today. Today's the day. Speak it into existence. I'm going crazy watching that gold trade chop. I mean, can we just acknowledge, is that not such an ugly chart? Who just said, no, that's a beautiful chart, is somebody who buys and sells highs and lows. Like if you bought here, bought here, bought here, bought here, bought here, sold, sold, sold. Like if you were just trading the range, then you're like, that's the prettiest chart I've ever seen. That is a mosaic right there. But if you are like me, you trade trends or look for like breakouts, retests, continuation plays, this is such a horrific looking chart. That being said, still long gold. Come on, let's see it happen. Today's the day. Breaking out. I'd love to see it above and close above that white dotted line here on GLD. If we can close above today, I will finally trail stops. Excuse me. So let's get that perfect candle.
That green candle right there.
Anyways, dollar CAD was what I was looking at. So dollar CAD, I don't hate it. I think that there might be some decent opportunities here. Dollar CAD's getting a +5 on the Edge Finder. It's got an upward trend, spotting GDP differentials between the two being strong for the U.S. So growth of the U.S. economy looking strong relative to Canada's. Services and manufacturing PMIs kind of mixed here between the two. Take a look at retail sales, favor the US. Employment change favors Canada in this case, but unemployment rate favors the US. So some mixed sentiment there. Interest rates coming down for the US pretty aggressively. So I have enough of a conviction here to potentially take a trade on dollar CAD. If I did take this trade, I'd look for, because we've got resistance up here, I'm going to look for this, and I want to just see really quick where these line up. Yeah. So something like this could be interesting. Maybe a pullback into this area, stops below here, looking for the break, continuation of this. If I take that trade, I'll share it inside of the Discord channel. Speaking of which, currently we're doing a big discount off of the Discord group. If you're not in there already, you get access to all the trades being taken. You can sign up and get access to my trades, Frank's trades, who I keep mentioning. Ivan is also in there, shares some of his stuff, and a separate option for those of you guys who are members already. If you don't already have access to the Pulver Alert service, you can now get access to Chris Pulver, who comes on the show all the time. He's sharing his trades in the group as well. This is now available. If you'd like to get access to those, we'll drop the link here in the chat to speak directly to a member of our support team who can set you up with a membership. Just let them know which signals you're looking for. If you'd like to get access to my trades, if you'd like to get access to Chris Pulver's trades, Frank's trades, just speak directly with a member of our team by doing so right here, and they will direct you in the right spot to get access to our trades. Now, let me just preface something with this. A lot of places will offer signals and things like that, but they won't show any sort of track records. Chris Pulver, when he comes on the show, he's logged in to an institutional platform managing millions of dollars for traders. Okay. Myself, I show all the time. Live broker, I'm logged in right now. I show you guys hard-earned money. So the reason I point this out, oh, yes, gold. Yes, do it. Do it today. I've been waiting for this breakout for a long time, as you can clearly see. So reason I bring this up is that, you know, when we sell a service, we back it with our own hard-earned money. We trade real money. We show live brokerages. No nonsense, no nothing. So if you'd like to come join the action and trade alongside myself, trade alongside Chris, Frank, Ivan, whoever you'd like to get access to, please send us a direct message now, and you can get access to all of these signals directly to your phone or to your desktop. Take advantage, because we are currently doing a 35% off discount off of the membership group. So get 35% off chatting with a member of our team right now using that link that's in the chat or in the description down below. Maybe we'll drop that link one more time if you don't mind, Chandler, just so we can get that in there for anybody who would like that. Ari says, give me a dashboard discount. Send us a direct message. We'll give you the best option we currently have available. All right, guys, we're going to take just a quick break here, and then we got Miko and Marco joining for Technical Thursdays, and should be a lot of fun talking some charts with them. Stay tuned. We'll be right back with both of them. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with Miko and Marco. Hey guys, how's it going?
Hello. What's up?
Good to have you guys back for our weekly segment here. For people who are new to the show, new to the stream, every week on Thursday, we do a technical breakdown with these two guys. Both of them have years of experience in the markets. We talk and share all sorts of different charts that we're watching. So thank you guys for being here. And again, I think we should change up the format that we've been doing these. So I have a new idea, which is maybe I'll go to each one of you guys and we can each just share our quote unquote chart of the day, which would be our number one most convicted idea and or current position that we're in and managing. And I'll do mine after you guys go. So maybe we can go Miko first. Miko, do you have a chart of the day for us?
Yes, I do. Eyeing up Euro USD longs. Haven't entered yet, but I'm waiting for this 4 hour to close. And if it closes how I want it to, I will look for an entry. Key thing I'm looking for is momentum. And we just had a bit of a push right now, I think, from the news. So if we can get a solid close there, I will be looking for an entry. But the idea with this Euro long idea is that we had a lovely move to the upside during August, and I'm looking at now at this bearish move just being a pullback for the market to continue. We've been showing really nice signs of higher highs and higher lows on the daily chart. I'm looking to see if I can find the next higher low. I marked out a couple of other levels, which I'm looking at should we have a deeper pullback, because I have drawn out this fib and I do like this 0.5 area and this 0.618 area. So if this area was to fail, I will be looking for some more entries deeper down. But for now, I'm happy with this. We're looking like we're having a nice reaction at that low. I just need to wait for that candle to close, and I could be looking to enter pretty soon. But yeah, this is the best one for me. I was looking at pound as well, but euro looks better. So yeah, I'll say euro longs for now.
Okay, fair enough. Yeah, I like that setup. I think the EU and GU, so the pound and the euro, both have some interesting chart pullbacks setting up. I've been watching them myself as well. Pound USD also looks really interesting, by the way, but we'll broaden our scope in just a minute. Let's go to Marco in terms of your top, your chart of the day. Chart of the day, whatever you want to look at. Number one, I guess, most convicted chart currently.
Yeah, unfortunately for today on this 1 hour chart, things are looking pretty corrective and range bound. So the only thing I'm actually looking for is for, let's say, range bound entry of buying this bottom or selling this top right here on the euro and the US dollar. EJ is looking pretty corrective on this 1 hour. Aussie and US dollar maybe looking for a range bound entry. AJ is pretty corrective. Pound US dollar is also pretty flat here, and NJ is the same story. So for me, the 1 hour chart is not telling me much, and it's a day of patience, let's say. The JPY pairs were definitely showing like a big downtrend. If we go to EJ, for example, it was showing a nice downtrend. But again, just could not commit, didn't give me any very high probability entries. I did take a sell setup, but it was a loss, unfortunately. So I want to see it continue down, to be honest, maybe tomorrow, but most likely next week. And then I'll be looking for some setups. For now, I'm just sitting on my hands.
Okay, fair enough. And I guess I'll go just give you guys my quick chart of the day. I was making noise about it when you first joined, but my gold has got to be my chart of the day, because I have been sitting in this, guys, for 21 days now, where price has gone absolutely nowhere. It's kind of a small position too, which makes it even more frustrating. So I've got like a small size on gold long, and we're finally seeing the breakout potentially form. I'm very curious, and I imagine this also carries over to what you were saying, Nico, with the euro dollar trade idea. Is like, let's see these candles close with some decisiveness. Let's see, some bullishness hold here for both gold and euro, which for those who may not be familiar with the interaction between those two, euro, dollar, and gold typically have a positive correlation. So we will see how that candle closes. But for me, my chart of the day would be gold. For me, this is a position that I've been in, and why this is an important day potentially is that if we do get a closure above here, if we get a nice all-time high close, that will give me, in my rule set, a okay to actually trail my stop loss from where it currently sits into profit, and I will probably do so on the 4 hour chart. So when I marked up this trade idea, I had this white line, which is the all-time high. I basically said from the beginning, I'm going to hold on loosely to this idea. If we break through the highs, I'd like to trail. If we don't, I'm out. So it's a pretty good risk reward trade currently. I think it's floating, let's see, about a 5-to-1. I shoulda, coulda, woulda put a lot more size in this trade because it's a small position for me. But a win's a win, and I'm going to probably get a chance to trail stops here if we can hold gains. So that's my chart of the day, and a good start after what has been kind of a not really rough week for me, but I want to get you guys' thoughts on this. So I'm feeling frustrated because I went long the S&P 500. I'm going to ask you guys about the stock indices in just a second. I went long over here, made a good bit of money on this move higher. I trailed my stop loss here, and I got trailed out when this candle fell off a cliff. And I felt like an absolute hero for the next few days, because I'm like sitting there, I'm like, I got out of this trade. Market sank lower. and I'm just sitting on the sidelines, sipping lemonade, like it was like I dodged a bullet kind of thing. And then the market snapped back, and it's like a weird thing because I didn't have a position on, but this like frustrated me. It doesn't make any sense because I'm not in the trade, but I'm like, I had wanted that thing to keep going lower so that I could have felt like, even more of a hero. But that's just an example of psychologically how it's so weird how that works. I'm not even impacted by the market going up because I don't have a position on, and yet I'm still being frustrated with it. So, Miko, I guess long story short, what are your thoughts currently on where indices are at, S&P, NASDAQ, whatever you'd like to look at? And I guess to couple it with that situation, how do you handle those moments where, you get stopped out and then the market moves in a different direction than you wanted to, something like that?
Yeah, I mean, yeah, it's been an interesting week for the indices. NAS, US 30, S&P, other indices as well, all seeing a lot of upside. I think it's been an interesting one because they're not necessarily, I mean, looking at the Dow Jones, not necessarily flying to the upsides. It has been pretty corrective for a while. So they are kind of just slowly chugging away. And I have been looking at NAS a lot. Again, I'm still longer-term bullish. The daily, the weekly chart, the trend is still very much at play. So I still do see them eventually pushing up, but they have been a bit awkward to the trade. And looking at that S&P position you spoke about, of course, in hindsight, it looks you a bit unfortunate, but closing a trade after a breakout like that made a lot of sense. And another universe has kept falling. But I do think we can probably see the indices continue to rise if that higher time frame bias is going to come through, especially with the news how impulsively they're pushed. It does look like they're starting to form a bit of a bottom, and some pullbacks, some re-entries could be looking good for them. In terms of missing trades and being stopped out and seeing price go in your favor, of course, that's the reality of a trader, which we all kind of know of. But then again, once you experience it, of course, it's difficult to take. In terms of my personal experience, I think the best remedy for that is always just to focus on the long term, because I can think of a year ago, I've been stopped out of position, seeing price go my way, it's being annoying. But a year later, it doesn't really have a bearing on your trajectory as a trader. So always think about the long term and think, does this, missing out of this position impact the success of me as a trader? No, it doesn't. So always know there's a new trade coming and just focus on the long term, because at the end of the day, that's where our focus is as a trader.
That's a great point. And that's, I like the way you started that too, where you said in another, universe, it continued to plummet and you would have felt better about it. But it's so true. If you repeat the same, approach over and over, there are going to be times where it feels foolish. And there's going to be other times where you feel very thankful that you played it the way you did. So good points there. I guess, Marco, same question in terms of indices and where you see them at, where you see momentum, as well as how to deal with when the market kind of whips you out of a trade.
So for the S&P 500, I can definitely spot a pattern that I like to trade, which is the V reversal. It is a bullish pattern. It is right here. It's also called a cup and handle, or it's called a inverse head and shoulders. But basically, it's a bullish pattern. So I would expect to see more upside on this daily chart. Maybe a smaller one is printing here as well, if you can see it, if it can finish on the top. So I'm bullish on the S&P, but yeah, getting stopped out, it's kind of it's a part of the game. You're gonna get stopped out, and then you're gonna have the position flying. I had a case one or two times in the last 3 years where the trade went to 10% profit and then reversed all the way back to my trailing stop loss and took me out for like 0.5% or like a 1% gain. So that was pretty tough to watch, but it's all a part of trading. You cannot refine it so that you do not experience those hard times. Like, everyone goes through it and there is no cure to solve it. You just have to experience it. And I also wanted to ask, so where was the initial stop loss for your gold trade? Was it where it's currently marked? So do you still have it there, or
still the same spot, just below that that level of support, around 2460?
Ah, nice. It's pretty small stop loss. I thought you used bigger stop losses.
I usually do. Well, actually, initially it was bigger. So you called me out on that. I think my initial stop loss was here, and then I eventually, when we started reacting very quickly to this level, I trimmed it here. But my rule was, or my plan here was, if we can break through the highs, then I'll finally lock in some gains on this position. But I've been trying to hold on really loosely. This has been more of a swing trade intentionally, but I would like to see this thing break and continue. But we'll have to wait and see.
And do you know like the usual size of stop loss you use on the S&P 500?
Yeah,
In
so
pips?
I do typically try to keep an eye on like the average true range of the the S&P 500 daily range. I trade when it comes to the S&P and the Nasdaq, et cetera. I typically trade the 4-hour and the daily chart. So I'm looking at what the average move is, and if I just apply the average true range, it's like a quick tip for anybody at home that wants to do this or consider this too. It's a really simple process. Basically, I just look at the average true range here. So we're moving like 80 points per day. So, that would mean that the range would be like down to here or up to here on an average day. So if I'm going to put a stop loss, I do like to get stopped out if I'm wrong within like the first 1 to 2 days. So that would give me a point distance right now of like, maybe I'm shooting for like approximately 90 to 100 points. So just give it a little bit more than the average true range daily range. So it depends on price action and structure. But I would say typically I'm looking at the ATR to give me just a general idea of where to place stops. But that's a good question.
Yeah, I've been testing the 15 pip stop loss on the 1-hour chart.
Yeah.
And it's not big enough. I need to increase it. So I might jump on the ATR on the 4-hour. That's going to be like 30, 40 pips. I think that's going to be the optimal because I keep getting stopped out and then the trade goes in my direction. So 15 pips on the 1-hour, I found this is pretty small.
Yeah, no, that's playing with stop loss size is really key, especially when changing instruments, when changing something to something different. Next question for you is this recent movement here on the dollar index. I'm curious, Miko, where you're at with the dollar index. Do you think we have a potential bottoming forming here? I mean, we've put in a couple lows, but we've also just been stuck in this range. Do you have a bias in the dollar? Are you neutral? Are you still bearish? What are your thoughts?
Yes, I am pretty bearish on the dollar. I do think we can head lower, but we have kind of hit a big area, which has kind of caused this consolidation. Actually, if I go to the weekly chart, actually, you can see we kind of collected a lot of wicks here, a lot of rejection over the past few months. Well, since Jan 2023. Once we did break through and we ran to 99.6, and that's kind of where I do expect dollar to make a move towards, but it depends, because if we do hold into this area, we could see room for a pullback before that does drop. And I've kind of factored that in with the Euro USD longs. If dollar is going to have a bigger pullback, I'll look for a bigger pullback in euro. But the plan is for myself to look for that lower high and a push down. So I am bearish with dollar, but yes, we have hit support. We're struggling to break through. I'll keep an eye on this zone here. Should we have a bigger pullback? But at the moment, we're struggling at this level here. So for me, it's a bit trial and error with dollar. I know I'm expecting downside, but as to how far the market pulls back, of course, I won't know till we know. At the moment, this area is proving pretty sturdy. So hopefully we can see some downside from that. If not, then I'm looking at this 102,600 area. But I do think longer term, there's room to the downside.
Okay. Yeah, fair enough. And Marco, same question to you. Generally speaking, dollar index, looking more bullish, bearish. Is there any, I know this is a pretty choppy chart on the 4-hour. Is there anything on the 1-hour or range bound setups that you're looking at?
So DXY on the daily actually looks pretty trending to me in a big bearish downtrend. I can see some really strong legs of momentum. Currently pausing a little bit with this bullish pressure on the bottom. But overall, for me, as looking at just the technicals, I think this is still in a downtrend. So I am bearish on the DXY. The 1-hour is going to be pretty choppy, I assume. Yeah, pretty choppy. And the 4-hour is going to be the same. Yeah, just like in a flat range. But the daily is, for me, trending to the downside, approaching some major support right here and right here. So expecting a bounce. It kind of already bounced here. Yep. So expecting another bounce maybe in this area. We will see. Maybe just like a small correction before it continues dropping down. I would definitely like to see a drop down, because then my dollar pairs would make some nice trends, and that's always good.
Yeah, fair enough. And I think when it comes to the dollar index, seems like it's sort of in a limbo period as we wait for what arguably is the big event next week, which is the Fed meeting where they're expected to cut rates for the first time. And the market is eagerly and nervously waiting to see how everything shapes up across the first rate cut. So we will have to see. It should be a very busy week next week with all of that. We do see also our famous Bitcoin. I wanted to ask you guys about this. We've just been continuously chopping back and forth. Any thoughts on Bitcoin, Miko, where we're at currently with kind of this daily channel?
So yeah, we came back to the low of that channel, and we've had a bit of a bounce. So it's been interesting because we're still stuck within this range, and the longer we continue, as Marcus has spoke about a few times, the longer we continue in the range, the more difficult it is to see Bitcoin take to the upside. But we have bounced at the low there around 52K, and I am looking for a push at least back to the middle of the range, which is around 60K with this line here. So hopefully we can see a bit more upside for Bitcoin, but truthfully, if we still spend a couple more months in here, I think we probably will see price break lower. There's massive support around the 54 area, and if that does break, then I think the floodgates will open for Bitcoin, potentially back to 44, 45K, 40K as well. So yeah, with Bitcoin still holding on to support, still holding to the low of the channel, I'm not too confident that we're going to break to the upside. And I think if we do break lower, there could be some really nice shorts to take advantage of as well.
Yeah, fair enough. Yeah, I think Bitcoin's just been one of those things that it also kind of like gold is probably driving people crazy, where it just chops. And this one's even worse than gold because it's been chopping for, the better half of a year or so. Really a lot of sideways consolidation. If you're an investor in this thing, if you have a long-term belief, maybe you're looking at this as a bigger, longer-term buying opportunity. But for traders out there, it's probably been very frustrating to try and watch and look for breakouts for so long. I know you, me, and Marco, we've been watching every week, and it just seems like it goes sideways. But we do keep up with this because there will be a time, and we all know it, there will be a time where it does finally make its big move, and we want to have prepped or already thought about it in weeks before. So, Marco, same question to you. Bitcoin, anything here that you're interested in or keeping an eye on?
Yeah, so for Bitcoin, still in no man's land. So hasn't broken the major low, hasn't broken the major high, and I'm being patient right here. So yeah, the longer it ranges like this, the more bearish I am. But until it breaks these key levels, I'm just calling it range bound on this daily chart. The 1 hour is not doing much either. It's basically just moving in this sort of very corrective descending channel, but I would say it's even like a flat range. So not a good story for Bitcoin. And also I wanted to comment with the election coming up. I know in Forex, usually Forex kind of slows down maybe 2 or 3 weeks before the election. Are the indices the same, or what's with the volatility on indices?
Yeah, I think that in terms of the indices going into the election, it all kind of the main focus point. I think the election is like what many people think the main focus of the markets is right now, but I think the true main focus still is what the Fed's going to do, where the economy is at, and when they do start, easing interest rates lower, is the market in a good enough place where it can, it's not going to crash, the economy's not falling apart as they cut rates. I do think that the election, of course, is a head turner and can cause some volatility in the short run. But I think in the broad scheme of things, the far more important thing to the financial markets is the Federal Reserve and the economy. So I do think that there is some wait and see, some uncertainty that is being, brewed up because of the election. But I think it would be kind of a mistake to overemphasize just how important, whether it's the red guy or the blue lady. I really think that that's a bit over simplifying markets, whereas really the markets, they see presidents rotate in and out for hundreds of years now, right? At the end of the day, it's the economy itself. It's the state of corporate America, earnings in America. It's about, where our economy and monetary policy is. So the fundamental side, I think the election is almost a bit of a distraction to really what matters the most. So that would be my take on it. Honestly, it is fun to play around with and watch Twitter get all angry about everybody. But I think in actual practical fundamental analysis standpoint, I think it matters a little bit less. Actually, one thing I will say on the election would be the market typically likes the most when there is a Republican or Democrat in the White House and then Congress is the opposite, because then the market says, oh, they're not actually going to get all that much done. And that's good for markets because there's no unexpected stuff. The markets hate uncertainty. They will get scared and sell off. If there was like an all blue or all red, it would make people nervous because then they're like, oh, that means a lot of change is going to take place. And the market, just like all of us, hates change. So, it's one of those things. Just my 2 cents on elections as we go into it. Don't hyperfixate on who's the president. I would say just keep an open mind and watch the economy. So anyways, Miko, Marco, I guess that's pretty much everything we had to go through here today. Before we let you go, let me just mention we've just dropped here in the chat Miko and Marco's YouTube channel, respectively. Both of them put out great content, put out a lot of free value. So I want to ask a favor of everybody watching. We've got 821 people between all the different platforms. We're on Twitter, YouTube, etc. right now. Wherever you're watching, do us a big favor. Go subscribe to Miko and Marco on their YouTube channel. It's Miko Audu and Marco's Trading Journey, both on YouTube. You guys can find them there. If you're watching on Twitter, just search them up. Give them a subscribe, give them a follow. And thank you guys very much for coming on the show.
Yeah, thank you.
Thank you.
See you next week.
See ya.
Bye.
See you guys. All right. Always good to have those guys on. Again, every Thursday we do a bit of a technical breakdown. On the end there, we had a little bit of fundamentals in regards to the election. But I really do mean that with the election. Don't let it distract you. If you are a fundamentalist, it's very easy to get caught up in Twitter drama. But focus on what matters here. Eye on the ball, which is the Fed and the economy. All right. So gold is maybe doing the thing here, guys. Gold might be doing the thing. And what I mean by that is breaking out. Finally. I feel like I'm going to look back. I don't know why, and this has nothing to do with my actions of what I'll do in the markets, but I have a hunch, which I don't make decisions based on hunches, that this market is going to somehow mess with me today. And as soon as I say, oh, look, we finally made the breakout, it's going to reverse course and it's going to fall apart. But let's hope that doesn't happen, because I would really like to be able to trail a stop on this trade finally. And maybe we can have a John Cena moment, rip through the highs, jump off the ropes, slam into the what do you call that? The canvas, WWE canvas, the boxing ring thing. Anyways, to-do list for me today would be watch for dips on the S&P 500, NASDAQ. If that happens, I may sell some puts and stocks that I like. I want to trail stops on gold. And I'm going to look at potentially re-entering the Nikkei on a short setup if I can get that play to reset. It's a couple items that I'm watching for. All trades that I take will be shared inside of our Discord channel. Heads up, it is currently 35% off. If you'd like to get access to the trades being shared, you get access to our full in-depth analysis. I mean, let me just give you a bit of context here. Number one, we trade live accounts on YouTube. We trade live accounts within the broker or within the group. I show live brokerages for two main reasons. Number one, it's good for my business. I don't want you guys watching me and being like, does he actually trade or is he just on a demo account? I trade live accounts, no question about it, all the time, every trade, hard-earned money on the line. And I think that adds value to what I offer as a business owner. So that's transparently why I also share that all the time. Number two is that it gives the members, users, viewers, audience, whatever, some solid basis to say, okay, they're actually trading in front of me. They're really doing this. They're not just sounding slick with it. And that is also, an important thing that if you're going to purchase a service from us, I want you to know you're not wasting your time and buying something, that you don't even know if they actually trade. So heads up, if you'd like to get access to the Discord group, it is currently 35% off. And we just launched a new service where you can get access to Chris Pulver's trades within our group as well. So if you would like some information, if you'd like to get access to my trades or Chris Pulver, who's a regular contributor to the A1 Trading Show here, we've just dropped a link here in the chat. Speak directly with a member of our staff to get set up with a membership so you can get access to our trade alerts, get access to our coaching room, chat rooms, educational value, tons of stuff. So if you're an aspiring trader, you're tired of messing around, don't know what you're doing, come join the group. It is worth the money. All right. So with that said, we've got our next guest taking over the show. You guys know him and love him. It is FX James, Forex James, coming in from Elite Traders. We'll drop the link to Elite Traders and his YouTube channel in just a second as we just roll this quick clip, get it set up for our next show to begin. So stick around with James. I would give a medal to James for cleanest looking charts on our live show. So it's got some clean charts. Stick around, you'll see him. Stay tuned, guys. We'll be right back. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can if you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on TradingView.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello, ladies and gentlemen. How is everyone doing? Hope you're all having a great end to the week. So I appreciate the shout out for the clean charts. So open positions, I have got the dollar Canadian to the short side, euro dollar shorts, Canadian Swiss franc to the shorts, and I've got coffee going to the long side. So not much development really. The dollar is still pretty stagnant. I'll change this to candles for you guys. Still within this range, very little happening on the dollar so far. And to be honest, I don't really see much changing in terms of the dollar. I think what we're going to see is some pricing out of 50 basis point cuts and more of an expectation towards 25. That seems to be the gold standard now, or what people are expecting. Or I should probably clarify, the larger market participants are expecting 25. There was quite a lot of talk of 50, and as I've been saying quite frequently, I think a lot of large investors are made out of glass. They're very, very sensitive. So any sort of data, they'll rush to a 50 or a 25, and then we get closer, and then that's when they start revising and focusing in on the data. So I think they panicked. I think they saw a huge change in NFP. And yeah, there was a lot of panic and a lot of fear. They sold off expecting 50 basis point cuts. Then we got a little bit of relatively better data for the dollar. And now it seems they're expecting more of a 25 basis point cut. So, that's why I'm looking to be a bit more bullish on the dollar, but I've hedged that with a US dollar CAD short to offset some risk on my euro dollar position. So there you go. That's that. In terms of what I'm watching, I think NASDAQ to the upside looks beautiful. Again, let me just change this to candles for you. There we go. So what we can see is we've come down to this 200 moving average, and anyone that watches my segments on these streams frequently, you'll know I talk quite often about deviations between the 200 and price, or the 200 moving average, which is here, this light blue line, and price. Now we had quite a large discrepancy here. We were, 17.5% above this 200 moving average. I said to me personally that was way too high. I wanted to see a move to the downside, which we did. I didn't buy in here because this was during a risk off move, and I don't want to start buying into risk off moves. I think that would be a little bit too aggressive for my trading. However, since then, again, I missed this, unfortunately. But, you know, in hindsight, I would have taken this any day of the week. We came into this this fib level from low to high. The 200 moving average, again, was very, very close to price, which was great. So I am looking now just for another opportunity to get into NASDAQ to the long side. I'm not overly concerned in term, actually, let me just find it. Not overly concerned about missing the entry because we are still in September, which is still a bearish period. Actually need to minimize. There we go. Still a bearish period for stocks. So if we look for September, normally we expect a little bit of sideways movement or some movement to the downside. And then as soon as we get out of September, we can see the bull market comes back, or, you know, the sort of typical bull market that we expect with a lot of the indices. So yeah, more than happy to wait until October comes, and then I can start looking to potentially execute on this position. So yeah, that's it for now. I've trimmed down my watch list quite significantly. I was watching a lot of pairs, even Euro Australian. I'm kind of on the back seat of this one now. Not really. In fact, I'm just going to remove it. So essentially, the Australian dollar I've been quite bullish on recently. However, I'm starting to change that bias. I think actually, luckily, I didn't actually execute on my idea of being bullish on the Australian dollar. However, what I'll do is read this conclusion. So the Australian dollar's performance remains heavily influenced by global factors, particularly China's economic trajectory and global commodity prices. Now, just from that sentence alone, we already know the Australian dollar is not going to be doing too hot. So yes, you can say gold's doing quite well, but if we look at sort of copper and oil, so those sides of commodities not doing too hot. China's economic data has come out very, very weak. So yeah, the Australian dollar is not too hot. Obviously, the European Central Bank is also in the process of cutting rates. So yeah, not looking too attractive anymore. Wheat is looking great. Actually, here's a little bit of a tip for anyone that doesn't trade commodities but is interested. So commodities such as wheat, coffee, corn, they're all influenced by they're all influenced by a very similar factor, which is weather. Something interesting about weather is you can kind of predict it. Now, obviously, you can't say, oh, it's definitely going to rain tomorrow, or I know next Tuesday is going to rain. But what you can do is look at times of the year. So obviously in winter, things get colder. We often see more rain. In summer, things get hotter. It tends to be a bit drier. So you can kind of start to look at things like corn and coffee, wheat in a sort of weather cycle. So seasonality works really well for these types of assets. So let's have a look at wheat. So during, you can see sort of in the start of the year, we see sell-off. And to be honest, actually, let's change this to 15 years. So you can see actually we can be pretty bearish from May until September. And at the end of September to August, we can start seeing some bullish moves come back into wheat. And this is what I'm looking for. I'm looking for this month to finish this sort of cycle of selling off in wheat. And then potentially we can start seeing some movements to the upside. Now, of course, there's a lot more that goes into those commodities, but that's just one aspect that I would suggest looking at if you do trade things like that. Hi, James. Based on market reaction, we can say that unemployment numbers are more important than PPI. Yes, it seems so. I think, it's pretty understood that this rate cut cycle seems to be more focused on the labor market rather than inflation. Last thing I'm actually looking at is Microsoft. Now, I don't trade stocks. I'm not a stock trader. So what I need to do is specifically go out and do some research on this before I actually do anything. Just on a very surface level look, though, Yahoo Finance seems pretty bullish. We've got buy and strong buy analyst recommendations. The target price is 496.67. So you can see I've got a rough target up here. I'm not in this position yet. Well, as I said, I need to do some more research before I actually go into it. What was I going to say? Oh yeah, here. Again, let me just pull up some seasonality because that comes into play. So we've got here, if we look, let's do 38 years. So we've got the maximum amount of data. Let's go from the 12th of September, even to the end of the year, we could expect if we were buying Microsoft for the past 38 years in this exact time, between these exact months, we would have won 27 trades and lost 11. So historically performs very well towards the end of the year. But again, I need to do some research and actually make sure this is a good stock to buy, because I don't really keep up with stocks on a daily basis. You want my research? I'll tell you what, because I am such a good guest and I'm such a good guy, I'll give you some research. Let me just give it to the A1 guys so they can share the link. The password for today is here. So it's 89H24R is the password, no capitals. If you just go onto the Elite Traders website, go on services and research. When you click on research, you'll get a login screen. Just enter that password and you can get access to the research. Private positions, don't really have much here except coffee. But yeah, I'm pretty flat now. As we're pretty close to rate cuts, kind of sitting on my hands. Got some light positions on, as I said here. Nothing too crazy though. CHF JPY, we can take a look. The yen seems to be doing pretty hot today, actually. Generally speaking, the yen is pretty strong. I wouldn't be looking to buy this market at all. I was in a long position, actually. Wasn't the best. I think we entered somewhere around here. Our stop loss was down here. We cut this position early, so I think we cut it around here. So we didn't take a full loss, which was nice. But yeah, I think that was our final stab at going short on the yen. For now, kind of sat on the sidelines. It's dangerous, I would say, because at the moment they're holding their rates, but how long is that going to last? I don't know. We'll see. What do you think of NASDAQ? Looking to buy NASDAQ. I already went over it, but I'll pull it up so you can see. Looking to buy off this bounce off the 200 moving average. We've just also bounced off the fib. If we draw that from low to high, we've got the 0.5 and the 0.618 level. So looking for just a little bit of a correction back to the downside. And I'll enter. But again, just to reiterate, we're in a very bearish period at the moment for the stock market. So ideally, I'd be waiting for sort of October period. So around here. The password isn't working. Password should work. I'll tell you what, let me just double check. Give me 1 second. Let's see. So 89H24R. It does work. It definitely works. Make sure you've not got caps lock on or something. Nvidia, again, I'm not a stock trader. I can give you a very brief technical overview, but in terms of what's actually going on, in terms of what's driving Nvidia at the moment, couldn't tell you. It looks very similar to NASDAQ, actually. Let's do something here. Let's put NASDAQ next to Nvidia. Actually, it's not very comparable due to the percentage difference. Okay, well, never mind. But the charts look identical, actually. How do I get rid of that? There we go. So essentially, technically, I'd be looking for a very similar thing. Potentially just a buy here, stop below the previous low, and just look for a very quick. So, well, when I say quick, I mean a very easy 1 to 2, something along those lines. However, if you are looking at technicals, I guess we are sort of in a downtrend here. We're creating lower highs, and then we've come to create a higher low here. So I guess, depending on how you trade, you could wait for a breakout of this triangle, but I don't really trade like that. So let's see. Binary option is really easy. Sorry, binary options is really too easy if you know what you're doing. Never trade binary options. yeah, I purely trade FX and some commodities, not much though. Yeah, I'm kind of like a white bread trader or a brown bread trader. You know, it's quite bland. My basket of assets it's just so boring. However, you know, don't fix what's not broken. As I always say, you know, there's no point adding loads of stuff to your watch list that you don't know how it works or why it moves and all that type of thing. You don't understand the market itself, just to try and appear more fancy than you are. New Zealand CAD. We can take a look at New Zealand CAD. Let me just quickly have a look here. Fragile. So the Canadian dollar doesn't seem too hot. New Zealand dollar. To be honest, not great. Canadian dollar seems pretty weak. The New Zealand dollar faces the same issues as the Australian dollar in terms of relying a lot of China's output, or sorry, China's data. So it's kind of difficult to say, really. Daily time frame looks horrendous. Technically still bullish. We are above the 200 moving average. The weekly is bearish. We've just rejected the 200 moving average to the downside. So it's kind of what I say is in no man's land. H4, we've got quite a strong level of support through here, I guess. So yeah, I wouldn't be looking to trade this market, to be frank. I suppose if I absolutely had to, I'd be looking to go short, just off this weekly rejection that we've seen here. But that's very, very weak analysis, to be honest. Cat Leo, I love you. I love you too. Where are you at with UC? Let's see. So I've started watching my trades with line charts. So I put them on a separate tab here. And to be honest, I find it a lot more useful. It's a lot more aesthetically pleasing to sit and watch a line move rather than a candle, because you don't get all the noise with a line chart. It cuts out a lot of that, which is quite nice. Because I sit here all day just with charts on one screen, work on another screen, and maybe a film or a YouTube video on one screen. So to see your P&L constantly going up and down, or red bars, when you're in buys and stuff, it can be a little bit annoying. So I think a line chart's a little bit easier to just sit and watch. However, back to the point, the reason that I'm in the dollar CAD isn't for any fundamental reason, which isn't something I normally do. Normally, a lot of my positions are backed by fundamentals. However, as I said, it's more of a hedge for euro dollar in terms of trading the dollar. So I'm long and short at the same time. And the reason I'm in the position is essentially we've got this really nice level of structure, lines up really nicely with this 50% pullback. We've just hit the 200 moving average on the H4 as well. So yeah, pretty standard technicals. There's nothing fancy here, although the market drivers don't look healthy for this one. So if you're not already in, or if you're not in for the same reasons as me, I wouldn't be looking to sell this. I think Nick said earlier as well that the dollar Canadian is actually bullish on here. Let's see. Yeah, it is. So to be honest, buys do look more favorable, but as I said, I'm short just to protect some capital, which actually sounds a little bit counterintuitive if I'm going against what the markets, what the data says. But in this situation, it does make sense. How can I get the seasonality trades on FX? Seasonality is essentially just historical data. You can get it on Edgefinder. You can get it on other. It's widely available, but I use a program called SeasonAX. But I'm not affiliated. I have no connection to them, so I don't care if you use them or not. If you're not, if you don't use seasonality as a core concept for trading, then Edgefinder is completely fine. And use code ELITE on Edgefinder if you want to buy it. Anyway, moving on. You're good at what you do. Thank you for your time and effort. You're more than welcome. I appreciate that. Hi, James. How many currency trades would you have running at one time, considering the effect of correlation? That's a good question. It really depends on the trade. So it depends on the time frame and the reason. So, for example, at the moment, I'm in I'm in 4 positions right here. And this is kind of it. I don't think I would really be going into any more unless they're completely uncorrelated to all of these, which won't happen, I don't think. So I'm in dollar CAD, US dollar, euro, and coffee. So I'm not really looking at anything else. But yeah, that's kind of it. You know, I don't really set limitations. So, for example, I'll trade anything that moves if I see a compelling reason to trade it. So, although I don't trade crypto and I don't trade stocks, if I see something that is like, wow, obviously that's going to move the market, and I see my technical things come in, then I'll trade it. I don't, you hear a lot of people saying, oh, learn one market, learn to trade, trade one pair. And of course, that can work. I'm not saying it doesn't. But for the way I trade, obviously, it's a lot of economics. And that's quite easy to sort of copy onto other markets once you understand what's relevant, what you need to pay attention to. Anyway, I know that wasn't quite the answer you probably were looking for, but there you go. The S&P, I was looking to go short. Maybe I still will. Let's see. I was looking for the 50% level here. The problem is I just really don't like going short on the indices. I tried to go short. I was in exactly the same position as Nick on the what was it called? The JPN 225, but that was stopped out. Unfortunately, it was 1% profit, then 1.5% profit, then break even, then profit, then stop loss. It was just one of those trades that wouldn't stop. It was a bit frustrating, and that reminded me exactly why I don't short the indices. But I'd be willing to try once more here if we can get maybe an H4 bearish engulfing candle to close from here and sort of get rid of this. Obviously, it's a very small range, but get rid of this little range that we are in here and show a clear direction to the downside or clear momentum to the downside. I'd be quite happy to go short. I read an article yesterday actually on actually, let me see if I can find it. It was on investing.com. It was completely free. But it was saying that some of the analysts are expecting the S&P to go down to 4,000. And I don't expect that. So I'm not saying by any means that the S&P is going to drop to 4,000, but it's always interesting. Here we go. I found it. It's always interesting to read what certain people expect. The S&P could hit low 4,000 if things get worse. So obviously, if things get worse, it's not necessarily going to drop now, but I always find these types of things interesting. So if you don't read like articles and things, I would suggest you go and do. You can see some interesting things, you can see useful things, and sometimes things you can sort of just laugh at. But it's always good to get other perspectives on trades, get rid of some of the biases you have, and maybe flatten them out. So you're short euro dollar. I am short euro dollar. Nasdaq bearish. I'm bullish on the Nasdaq. Let me see if it's still. No, it's not. But yeah, Nasdaq seems fine. There's still a lot of demand for AI and tech. I don't think that's going away anytime soon. AUD NZD, exactly the same as what I've been saying. Both of the currencies are pretty correlated in terms of China. But yeah, I wouldn't. Yeah, nothing here. Yeah, I mean, the problem is the daily actually looks quite nice to go in short. So what we see on the daily is this meeting of the 50 and the 200, the fast moving average and the 200 moving average here, which can indicate maybe a sell. We are also seeing a bit of a rejection here on the daily candle, and the big but here is that we have just bounced off on the weekly time frame. So again, two contradictory signals for me. So we've got one bullish weekly time frame, one bearish daily time frame. We've also got weak Chinese data that affects both of them, so not really bothered. That'd be essentially trading two weak currencies, and of course, the point of trading is to trade a strong currency against a weak one. let's just check up on euro dollar here. So looking a little bit, oh, it's the wrong chart. Let's go here. Yeah, so I scaled in this morning. You can see one position down here and another one up here. Obviously, scaling is looking a little bit rocky at the moment. However, I'm more than happy to hold this into the longer term. The seasonality on euro dollar kicks in today as well. So let me pull that up for you. So we go to 15 years. Does 24 years work? I'm not sure. Let's see. No, you really actually 24 years works against me. So what we'll do is we'll choose what works. We'll go with 15. So we're on the 12th of September here until sort of the start of October, relatively bearish. I mean, we do have a slight push here, which is fine. If we do get a continued move to the upside in euro dollar, I'll just sell again. I've got no issue doing that. As I said, I'm pretty bearish on the euro at the minute, and I think the dollar has potential to maybe keep moving to the upside as we price out a 50 basis point cut. So I think that's kind of what we'll see as we go into next week. But again, as always, I could be completely wrong. Maybe the dollar will start selling off. But that's not what I expect. Gold. I'm really annoyed about gold. Really, really sad. So I was in, again, exactly the same as Nick. I was in here with my stop loss there. And I got trailed at break even around here. So it was on the 3rd of September, I got stopped out. And now we've just made all new all-time highs, which is great. It's all one of those things. You can't really help it, but yeah, it is what it is. But yeah, I mean, this shouldn't be a shock to anyone, really. I mean, I think most people on Trading Extreme, all the guests and Nick himself have been saying that gold's bullish. We've been telling you that there's not really any reason to go and sell gold. So yeah, there you go. Oil. I think I'm in an oil short actually on one of my accounts. I think it's on my copy trader account. Let me see. No, I'm not. I'm lying. Okay. No, I was looking to go short on oil, but I don't think I am yet. So what I would like to see is maybe a pullback to this level of resistance. Let's see if that lines up. And it does actually. If we could get this level of resistance tested again, then it would be quite nice. Let me draw my squiggly line. Move up to, it's the wrong squiggly line. Let me get the other one here. Move to the upside. So we hit this 50% retracement, maybe come and meet this 200 moving average, break in a retest of this previous support, try it as resistance, and then a continuation down to the downside. To be honest, my sort of cutoff limit on oil at the moment is $60 a barrel. So if we reach $60, I won't be looking to really sell it any further unless there is obviously a very clear reason to. But at the moment, $60 seems okay, although it seems very, very cheap for oil, which isn't always a great sign. Yes, I do think it'll be 25 basis point cut. If inflation's low, means currency is stable, not necessarily. All you've got to do is put it in relation to all the other data. So, you can have super low inflation, super high interest rates. That's not necessarily good, or vice versa. So it's always in relation to other things. Please analyze the DAX/German 30. I got my selling at blah, 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 and wondering if price will reach my take profit. Let's have a look at DAX. Oh. So you're short from, let's see, let me copy that. From here. That's a really good sell, actually. You've managed to catch, I mean, I assume you're in at this point here. Caught those wicks really, really well. You're a king, shout out. I appreciate that. I won't turn down a compliment. But yeah, I think, actually, I forgot your take profit, which is here. I think that's reasonable. I suppose the only thing in the way here is this 200 moving average. But German data has not been overly compelling. One of the reasons I'm short on the euro. So yeah, I think maybe down here, so maybe, yeah, just monitor. So I don't like to target wicks like this. The reason is I used to, and my take profit hit rate was a lot lower targeting wicks than it was targeting the bodies. But that's just from my personal experience. I don't have any real data to back that up. But yeah, just monitor it sort of around the body closes here. And if you see it continue to fall, obviously hold it. But yeah, that's just my 2 cents. Yes, I use Blueberry, actually. It's funny, as soon as the Donvo situation came out, I was looking at Blueberry. I actually quite like them. They're one of the only brokers that supports the commodities that I want to trade. And they also support stocks as well on MT5. And like I said, I'm making my FX book to back up all my claims. So I was looking for an MT5 broker, and Blueberry Markets popped out. So I've moved over to there. Anyway, let me actually, I should probably check the time. I'm not sure what time I need to come off. Oh, okay. I've still got a while. That's fine. I can stay with you guys for a bit longer. P, just because I'm saying that doesn't mean hold your trade. You need to obviously follow your own rules. You know, do what you need to do. Don't hold just because I said so. I'm still a little bit frustrated about this. So if we look on Edgefinder, we're still bearish. In fact, we're very bearish. It's marked as a -8 score. I wonder. Yeah, the analysis I had is still valid. Let me open it so you guys can see it. So you can see Edgefinder data is bearish. My research was bearish. So we have economic slowdown, tourism's limited impact, corporate earnings under pressure, rate hike expectations, market positioning and sentiment. So yeah, it's a little bit tricky because it seems very bearish, but again, just one of my rules, I'm not super happy going short on the indices. I might take one more try if we can get a nice H4 candle close here in 10 minutes. Might take one more small stab if we can get below this wick from yesterday. So it'd be sort of an entry around here, stop loss possibly here, take profit down here. I suppose the slight concern is this fib level has not been hit. But I'm willing to waive that for this time just to take a try. Again, the position I originally had was only half risk. So if I take another half risk here, if I lose my normal risk on 2 positions, that's fine with me trying to get something to work. And if it doesn't work, then I've not lost loads. Are they 0-0 spread? I don't know. To be honest, I use a standard account because the difference between using standard accounts and raw accounts are essentially where you pay commissions and have tight spreads. Standard accounts are where you have higher spreads but low commissions or no commissions at all. And a lot of people seem to think that raw accounts are for large capital traders. That's not the case. That's, from my perspective, that's a bit of a marketing gimmick from brokers because the more amounts of money you trade, the higher commissions they charge, or the more money they get from commissions, I should say. The real difference that I found with those is that if you're a longer term trader, standard accounts are better because you don't pay higher commissions for holding for longer. And to be honest, higher spreads, if you have a 200 pip stop loss and you get a 0.2%, a 0.2 pip spread, it's completely irrelevant. It doesn't matter. Whereas if you're obviously scalping, you need those tighter spreads, so raw accounts are better. But there you go. I need an extra cheer to get me to hold the trade, but thank you again. No problem. We appreciate you being here, James. Thank you very much. You guys give me a bit of an ego. Maybe I need to take a week off. Pound CAD. Let's see. I actually quite like this to the upside. As I said, I'm a little bit bearish on the Canadian dollar. I just realized I'm using the wrong chart, but that's fine. Yeah, I actually don't mind this at all. Maybe to go slightly higher. Now, I'm not super happy with the pound either. I am a bit of a perma bear on the pound, but in this situation, I'd be willing to let that grievance go and maybe get into a long position here. The reason I say that is because we are in a bullish trend here. We've just bounced off this 200 moving average along with this level of support. The slight red flag here is that we are in a range. So, of course, we could very easily, let me find the brush, very easily continue this range and then maybe get chopped up like we saw here. So that's a slight risk. But overall, I'm quite happy to say, generally speaking, this market might be going higher. What about selling euro dollar? Let's see. So you want to go short from 1.14. Take profit here. Just give me a moment to put your levels in. Stop loss here. I'll be honest, my friend. If you can pull off, let me just make sure I've got that right. Surely that's not what you're looking for. Entry here. Stop loss here. Is that really what you want to go for? Well, I think you'd be very, very, very fortunate to be able to pull off a 1 to 88. And I think you'd be even more fortunate to be able to get euro dollar to go back down to parity, or to trade euro dollar back down into parity. For anyone that doesn't know, parity is essentially just the flat 1 level on euro dollar. So yeah, good luck. I think selling euro dollar might not be the worst idea, but of course that's following my own analysis. I'm already in. Okay, you've given me a new stop loss. Let's see if this is a bit more realistic. Okay, that's no stop loss. I don't know. Anyway, I get what you're saying. Maybe the levels aren't correct, but either way, I think. Yeah, I think euro dollar to the downside isn't necessarily a bad idea. The problem we've got really is just breaking this movement that we're in. We're kind of in this cheese block, I guess you could call it. I'm not clued into all the technical names and things, by the way. You'll hear me misname candles and patterns and all sorts of stuff. But yeah, it is what it is. It doesn't really matter in my eyes. So we've got this 200 moving average. We've got this supporting trend line. We've also got this resistance trend line. So I need to see, for me to be fully convicted on this idea, some sort of break and a continuation to the downside. Now, if we start breaking to the upside, completely fine. I'll scrap my idea and I'll close out for possibly break even, maybe some slight profit, depending on exactly where I get out. Thanks to Nick, gold is paying me. Yeah, gold's going crazy. Rakesh, we've already looked at gold, and to be honest, it's at all-time highs. There's not more I can really give you on that one. Actually, let's take a look. Maybe there is something I can say on gold. No, there's not. Yeah, I don't know. I'm a little bit mixed because I would like to see something happen again that happened last time, where I initially bought from, which is this break and retest here. However, the higher gold goes, the more I'm starting to expect a profit-taking move. We've not really had a strong downside move on gold since when was this? Sort of the start of August. So it's been a month. And this, we often see a push to the downside on gold when we reach new all-time highs. So I'm sorry, Nick, if you are watching. I'm not trying to jinx you at all, but I would really like to see a move to the downside. And the only reason I say that is so I can get in, because I'm a little bit jealous that I'm not in it right now. So yeah, that's essentially it. At the moment, there's nothing you can do on gold. If you're feeling brave, if you've got those iron bull, in fact, I won't finish that sentence. But if if you're a super bull, maybe you could try and look for this break and retest off this level of resistance. But I won't be doing that. For now, I'm sat on the sideline on gold. I'll wait for a larger move to the downside. If we get it, if not, fine. I've missed out. That is what it is. I've missed out on gold all year. I'm fine to miss out for the rest of the year. I've got to target at 3,000. So surely by 3,000, we'll have seen a worthy pullback for an entry. I think I've missed a message here. Thanks, mate. Appreciate your expert advice. Do you think GBP/USD is continue to bearish in sept? Will it be similar to euro dollar? Well, the problem is they're not the same thing. I hear a lot of people, mainly on social media, so maybe you already know this, but I'm not trying to preach to the choir. But obviously, euro and pound, although they're quite tightly related, they're not the same. They have, individual things. So, for example, the Bank of England and European Central Bank. So just because one's bearish, it doesn't always mean the other one's bearish. However, seasonality, yes, they are very, very similar. So we could expect towards the end of September, so from the middle, 15th to the 16th until sort of the 25th. So you've got sort of a 10-day window here where you might be able to catch a sell on pound dollar. However, after that, there's not really much here. There's historically kind of just a range. Maybe a sell from February into October would be good. But there you go. James, you could always wait for the retest of all-time highs. Maybe. Amir, yeah, it's fine. Don't worry. I know what you meant. It was more just a bit of fun having a look at your crazy risk reward trade. But yeah, I should probably say don't go and start putting trades on just because you see me in them or you see someone else on stream in those trades, because what you might not see is why they're in those trades or how they're going to manage those trades. So for example, my management on euro dollar is going to be very, very strict. So when I close out, when I trail stops, when I lose, whatever, you might not see that. So you might be stuck in a losing trade that you followed me for, and you don't know when to get out or how to get out. So it's always good to do your own due diligence, or at least try and get a full understanding of why that trade is already on. Microsoft is open. Might be looking to get into this after stream. I won't be taking it now. It's just, I need to have a look into Microsoft and see what's going on. They've got earnings on 22nd of October, so we've got over a month. And we are, I guess I'd be buying into quite a strong level of daily resistance here as well, so I need to make sure that's sound. Can you check on the S&P on daily? It's reacting from resistance. Yeah, I was looking to short the S&P, but I gave up on that idea. Yeah, you can see I do like it technically. I do think it's likely going to head to the downside. I think I'd need to be very, very, very demanding on what I need to see on the S&P. If the daily can close bearish, then maybe I'll take a very low risk position to the downside and test the waters. But you'll never see me going heavily into the stock market on the short side, just because overall you're trading against the trend, really, aren't you? So I'm from the USA. Is there any platform which I can trade XAU? Yeah, I think Nick or A1 has affiliation with Webull, and you can trade the gold ETF, I think. I'm not too sure. You can trade gold on there, or it's like the gold equivalent. But obviously I don't need to do that because I'm in the UK. Ha ha ha. Hey, can you take a look at AUD CAD? Yep. Again, not really too interested in this one. Both pretty weak in my opinion. We've got conflicting trends on the daily and the weekly. The weekly actually looks quite bearish. We've got all of the moving averages that have sort of come and met in the middle here, and currently prices below them. However, on the daily time frame, we've just bounced off this 200 moving average. So for me, no-go zone. I need essentially all of the time frames to line up. So I need the weekly, the daily, and the H4 to be bullish, and then I'll execute on the hourly. That's the approach I take in a nutshell. Can you check retail sentiment? Yes, I can, but for anything specific, or do you want just an overall view on Edgefinder? Yeah, I can pull it up here for you. Retail positioning. There you go. If you want a specific one, I can pull it up for you. So what can we see here? Actually, pound dollar is getting shorted quite heavily. Oil, that's interesting. A lot of retailers buying into oil. Platinum, seems like they're very bullish on the commodities markets. Seems like they're pretty bullish on some of the indices as well. They might be on the right position for Russell, which is interesting. Definitely the wrong side of oil for now. But yeah, there's not anything shocking here, really. Short on the S&P, it's not really a surprise. But yeah, retail sentiment, something you should, well, in my opinion, something you should take with a grain of salt. It's nice to have on your side, but I would never trade just due to the retail sentiment. It's, you know, just because retails lose a lot of the time doesn't mean they always lose, and you don't know sort of the approach they're taking. So yeah, it's a good indicator, but it's not something I would take super seriously. I'm just thinking if there's anything I've missed before I go. I think I've got about 10 minutes left. Yeah, there's nothing here really. Seems like gold's still pumping higher. So I feel really sorry for anyone that's short on gold. You know, it's funny, actually, when I was in my long position on gold, from here, I got a message from someone on Twitter when we saw a movement to the downside here. And they said, I hope you've taken profits on gold. Why are you buying all-time highs? Although I got stopped out at break even, you know, I guess you could laugh at me a little bit about that. Look at where gold is now. So the idea was right, but there you go. As long as the analysis holds up, that's kind of the main thing, even if you're not in the trade. Have you looked at NVIDIA? Yeah, I did have a look at NVIDIA earlier, but I'm not a stock trader. So what I can tell you on NVIDIA is very surface level. You probably know more about the stock market than I do. When I say the stock market, I mean like the individual stocks and what's going on and things. But yeah, it's not something I concern myself with too much at the moment. The only thing is Microsoft, but again, I need to do some research. I'm not going to execute that one anytime soon. But yeah, I think NASDAQ is probably my favorite at the moment, if we can get this pullback, but I'm not sure we will. We've already kind of had the pullback and I missed it. So if I do see if I do see NASDAQ continue to the upside, it's my fault for not getting in. I need to leave the S&P here as well. Looks like we did we? Let's see. Yeah, it's just the H4 is just not convincing enough right now. I'll keep an eye on it, but yeah, I'm not overly bothered about trying to short the S&P, to be honest. Just hit TP on gold at 25.50. Probably has further up to go. Congratulations, well done. I'm sure there's a lot of money being made on gold at the minute, but there's also a lot of money being lost on gold. I'm sure a lot of people are trying to short it because, you know, the retail rule of sell all-time highs. Can you please give thesis on pound Australian? it's a little bit difficult to give you a thesis because I normally write them specifically. I can take a look at the research with you though, and we can come up with a thesis together. That's what we'll do for the last 10 minutes. So the way we do this is obviously you've been given this. However, the way I do this is I go every morning. I read the bank reports. I'll pick out essential parts and key topics, and then I will aggregate them all together. But what I'll do in this situation, I'll just read the conclusions just to save some time. So for the pound, in conclusion, while the GBP has demonstrated resilience due to expectations of continued rate hikes from the Bank of England, its future performance remains uncertain. Economic concerns such as stalling growth and high inflation could limit further gains. Key data points like wage growth and GDP figures will play a pivotal role in determining the currency's direction, particularly as investors weigh the potential for further slower rate cuts compared to the US Federal Reserve. Overall, the outlook for the GBP remains cautiously optimistic, contingent on how the UK economic performance compares to its European counterparts and global market expectations. So what we take from that is essentially the UK is, well, stable, but it doesn't have much in terms of expectations to be flying, essentially. And we would need to pay attention to, obviously, key data releases, as you normally would need to anyway. So nothing overly bearish on the pound. However, there's also nothing super bullish. I've forgotten what pair. Can you give us AUD? Okay, here. So again, let's have a look at the conclusion just to be quick. The Australian dollar's performance remains heavily influenced by global factors, particularly China's economic trajectory and global commodity prices. While the Reserve Bank of Australia has maintained a cautious yet hawkish stance, the currency's outlook is uncertain due to external pressures such as China's industrial slowdown and weakening commodity demand. Despite recent resilience against the USD, risks remain for the AUD, specifically with forecasts suggesting a gradual decline in the AUD-USD rate through 2024 and into 2025. Stabilization in the AUD-NZD pair is possible, but any major shift in the RBA policy or change to global risk sentiment could alter this outlook. Australia's economic future is tied closely to China's recovery, making it a key factor to monitor. So there we go. Boring bits out of the way. So let's go to the chart. GBP AUD. So what we know from reading that is we've got a stable pound. So I'm not going to say it's bullish, but I'm also not going to say it's bearish. I'm going to say it's stable to flat. And the Australian dollar sounds relatively bearish. Now, this is obviously due to the Chinese data and the weakening commodity prices. So having said that, what we want to do is start looking to short the Australian dollar and maybe hold the pound. But what you've also got to pay attention to is obviously, like I said, the key data coming out of the UK. And I wouldn't have any super high expectations for a rally on this. It'd be more a case of if you were going to buy this, you would have to keep in mind that you would be looking for a relatively short-term trade or a relatively small trade. I wouldn't be looking for, a 1 to 5 or a 1 to 6 or anything. Maybe just a 1 to 2. Obviously maybe a 1 to 3 depending on where your stop is. So that's kind of a very, very quick thesis built for you very quickly. But yeah, there you go. Again, I gave you that link, so if you want to do a deeper dive, feel free to go on to the research page and do your own and put it all together, but I don't think we've got time for that now. Just wait for gold to retest, make new structure, follow the trend. Yep. Selling gold to retest. You're very brave selling gold. I think it's possible, but it's risky. I wouldn't be looking to sell gold right now. But yeah, I think best bet on gold is just waiting for a retest here. But yeah, it would just have to be very low risk to be safe. But yeah, there's nothing else really going on. DXY. DXY looks like it's starting to head to the downside a little bit here. But nothing shocking, really. You know, we're still stuck in this little range that we've got going on. As I said, I wouldn't be surprised if we do start seeing some bullish movements on the dollar, and then maybe we start selling off a little bit. However, overall, I'm not super bearish on the dollar. I think we do need to price out some of the rate cuts that are priced in. I know there's expectations of very aggressive rate cuts of 50, but it seems very, very unlikely now. Actually, let's have a look at the Fed Watch tool. Before I go, let's just see what the expectations are. Yeah, so you can see this was a month ago, it was a 50-50, then it dropped to 40, then it's 14, now it's 15. And to be honest, I remember seeing this at 55. I don't know why it's not on here, but at one point, I think it was just before NFP came out on last Friday, it was a 55% expectation of a 50 basis point cut. And now you can see that's essentially gone. No one, or basically no one, is expecting that. It seems like 25 is the way we're going. So essentially, what I mean by pricing it out is when we get news as retail, I'll be very quick with this. I've got 5 minutes left. When we get news, so let's say, let's just use the Fed cuts. Let's say, okay, we know at this point that the Fed is looking to cut rates. So the Fed becomes dovish. That's meant to be a D. And then what that essentially does is that starts triggering and saying, okay, where do we think these rate cuts are going to be? Is it going to be 25? Is it going to be 50? How many rate cuts? Blah, 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 blah. And essentially people get worked up. We're seeing risk off movements. We're seeing poor NFP data. We're seeing poor jobs claimed, poor labor market come in. And people are panicking and saying, okay, we're going to get 50, pushing price down. And now it seems like we're starting to stabilize at a 25 basis point cut. So all of this 50 that was priced in, people expecting a super bearish dollar, needs to be priced out. People closing positions. Now, this is obviously a very, very simple and crude way of explaining it. It's not quite like that, but the explanation gets the job done. So that's essentially why I'm looking to short the euro dollar at the moment. Thanks for your help today. Really appreciate it. You're more than welcome. Thanks, gold. I'll take that. Goodbye. Yeah, guys, if you made money on gold, big congratulations. It was probably one of the most obvious trades of the year, if not the most obvious trade of the year. And I messed it up. So there you go. It doesn't matter where you are in your trading journey. You will never be perfect. You'll never always get the right trades all the time. Sometimes you can mess up and move stops to break even too quickly, like I did. But there you go. Again, congratulations for those of you who made money. I am really hungry. I just realized what time it is. It's 3:15 here, PM. I've not eaten yet. Just looking to see if there's anything final I can discuss before I head off, because I've got 2 minutes left. Gold does look like it might head back down a little bit. We are seeing a little rejection to the upside here off this all-time high. Now, if the gold gods exist, we'd like to see a move down to 24.80. That would be amazing, but whether we'll get that, I don't know. S&P, yeah, see, this is why we wait, because now this trade idea doesn't look too hot. Now we're getting quite a strong bullish candle, and it's only just opened. So for now, I'm just going to get rid of that, and we might come back to it later. NASDAQ also looks quite good. Just too high to buy for me. Wheat having a little pullback. Microsoft not doing too much yet. So there we go, guys. I'm going to call it a day here. I hope you all have. I'm not on tomorrow. I hope you all have a great Friday, great rest of the day, and enjoy your weekends. Get off the charts, get out of your jobs, enjoy life. When is a good time to enter euro dollar for the downtrend on a long? I would suggest asking that to the next guest. I don't have time, unfortunately, to explain that. I apologize. But yeah, anyway, like I said, enjoy your weekends. Have a great rest of the day. I will see you all later. Thank you. It's been a great chat as always. Thank you for having me.
If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the Edge Finder. The Edge Finder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The Edge Finder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with a rep to find out what kind of discounts are going on right now. Now back to the stream.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. Happy Thursday. Welcome back. A1 Trading here, 10:17 a.m. Eastern Time on the 12th. Price action looking like we're just trying to do a little bit more melting up, a little bit of quiet morning, which was perfect. This is what I'm seeing on my end. So this is the SPX with some gamma levels to the upside. The SPY probably targeting 560 today. That's the level that I'm watching that stands out the most. So right here in real time, this has been growing from about 255 net to now 450. So I wouldn't mind. Let's see here. I think we have price that wants to rip a little bit higher. Let me see what this is going to cost. This might be pretty inexpensive. If anybody's interested in a SPY trade with me, SPY for tomorrow's expiration. So there's two ways to play it. Today's expiration is going to be really cheap, but I want to make sure that we get there. If I put in a 560 long call, it's going to cost me 30 cents. Now, if we get up there in a decent time, we might be able to see this 30-cent call option trade for $1, $1.50, which is obviously a pretty good ROI. If I go out to tomorrow and I buy the 560, I'm going to pay $1 for it, but that's also within my expected move. So this could also increase in value. I'm going to go ahead and take this trade. I'm going to get after this trade here. So a 560, let me see, let me just double check this. So 560 for tomorrow. Let me take a quick look at price here on the SPY. 560, the highs of, yeah, this is fine, dude. We're coming back in this level. We're going to eat away that candle. All right, let's see when we get up there. I'm going to go ahead and buy this for 93 cents. I'm going to buy the 560 out for tomorrow's expiration. So let me see if I can get this filled for 95 cents. Filled at 93 cents. Okay. So that is a little trade update for me. That is an index trade, but that's actually, well, it's kind of a stocks and options trade, but I'll say it's an index trade. SPY 9/13 expiration 560. So buy the 560 call, 93 cents debit. So if price hits 560, I'll roughly calculate what I want my profit to be. So 560, we're at a 555.90 right now. So that'd be a $4.10 move at a 25 delta. I'm looking at about $1 profit. So I'll say $2 credit profit target or greater. If SPY hits 560, look to protect profit. Okay, so that is a trade here. Go down to a smaller time frame. Looking to see, actually, you know what? I'm going to take this chart. This is a better image to see. Take a screenshot here. And I'll go long, buy, 560 call, 93 cent debit, SPY 560 price target. Okay, and then I will point this right there, make this yellow. Perfect. All right, so I can copy that. I'm just throwing this in the alerts for my trade signals. There it is. And for all you A1 traders out there, there we go. Okay, so I just posted that in the alert section for the A1 trading community under Chris's trades. I put that in the index section, and I'm giving myself the day. I mean, I love 0 DTE, and this is awesome to like, oh, I turned 30 cents into $1. That's an awesome return on investment. But in the event that we don't get to 560 today, then that trade is going to be worthless. So I'm giving myself a little bit of time, see if this market wants to continue to melt up towards 560. So that's the trade. Let's go back to the daily time frame, and off we go. Okay, so yesterday was look. If you're not a daily active, watcher of the charts, nothing really was on your radar yesterday because there were no like outlier numbers. But if you were in the market like we saw yesterday, yesterday was a freaking wild day, right? I mean, I don't know if you're aware of this, but the SPY was down about 1.6% yesterday, right out of the open, and then proceeded to rip about 3% higher. It was like 2.8% to the upside later in the day. The Qs were down, I want to say over 2%. Let me check that here. I think the Qs were down close to 2% and then ripped up 4% intraday. That was just a wild, wild day. Doesn't seem like much for that downward move, but that was no slouch. 1.84% to the downside and then a rip of nearly 4%. So we closed out yesterday and here around 3.9% to the upside. Wow. Crazy day. One trade that worked out pretty well, and I'm going to actually got to log into Thinkorswim for this reason. I still have an ES butterfly spread that actually worked out really nicely yesterday. That was also in, if I go into Discord, here is my trade section here. So if you're subscribed to my alerts along with Frank and Nick and Elvin, here's my futures trade. So right here, this was the trade that I took with a 9/11 expiration, and it was the right profit trap that was spot on. And I got out with a good chunk of profit. I got out early. And I say early, it's like I was out of the trade in the afternoon, but here's what it actually looked like. This was kind of crazy. Okay. Can everybody see this right here? I don't know if you can see the number. Maybe you can. Look at that. Okay. So this was a $3 debit that was trading for 22.70 credit. There's not more bang for your buck than I can see than that trade right there. Now, is this trade something I win all the time? No, I probably win like, 1 out of 5 or 2 out of 5. But if I can get that type of payoff, I mean, who cares, right? If I net here 22.70 minus the $3 debit, that's a 650% return on capital. That is a crazy, ridiculous trade. Okay. So, and I paid for the other one. So net, like I lost on the put side, but it didn't matter. Like the call side was perfect. So I was really happy with that trade yesterday. That helped make up for my bonehead play of trying to call the broke wing butterfly on the NDX with Frank in the session. And look, Frank, he's like, why would you go after 25 cents? And I'm like, I'll go after 50 cents. Well, it didn't matter because I ended up losing like $1,100 on the trade. So the nice thing is this trade got me out of trouble, ended up making some net profit on the trade. And I actually had the same thing running. Let me get into my platform here. I had the same thing running right here. So I'm in the same situation as we're drifting up possibly higher. I might be able to trap this on the call side as well today. We're going to find out. So anyway, good stuff. Right. So I'm going to log into my Thinkorswim. I've got that trade tracking in real time, and I can also analyze it. I guess I can just go to my Tasty platform here. So here's my trade right there. Today's expiration, it is it's on the call side. So 1, 2, 3. Let me analyze this. Boom shakalaka. And look where we are. We're actually in my profit trap. Okay. Now, if I look to close this position, right now, I had a 250 debit that's trading for about $7 credit. So right now, we're already in some good shape. Now, if I go back to the analysis section here, 1, 2, 3. Okay. What are you guys doing? Sometimes this analysis section kind of annoys me because I just have a lot of trades. But here's the call, and analysis. There it is. Okay. So we're sitting in the profit trap. I'm trying to zoom out to get this thing to. Oh my gosh, this is so annoying. There. So we're sitting in the profit trap. It's trading for about $7. Now let me do the math on this because technically my break even is $5 because I have 2 trades on. Okay. So 250 and 245 means I put in a debit for $4.95. Right now I'm trading for about $7. So $7 minus the $4.95, that would be $2.05, right? Okay. Times a multiplier 50. I'm currently sitting up $100 on the trade. Now, profit wise, I'm going to look to see if we settle in around, this pin price is great. I want to see if price just kind of chills for the day. Later in the day, this will become more and more profitable. So I don't know. I think for right now, I'm just gonna let it do its thing. Here's another way to look at this trade. Okay, these bottom 2. Let me zoom in. Oh my gosh. There. That's better. Okay. Now, this is my trade. So I have some profit. What I'm looking for is if you can see this little purple line in the background, that is the actual P&L right now because we still have some time in the trade. But as this day goes on, this becomes the purple line will look like this. And it becomes pretty much exactly like my constructed trade. So if we just kind of hang out here, maybe go up a little bit, down a little bit, we just kind of stay put. Later in the day, this thing gets higher and higher in profit. So I'm going to go after a nice little peak profit today if I can and try to turn hopefully what's a total of like a $5 debit into another, $15, $20 credit, make a nice little net chunk of profit. So that'll be the plan on ES today. Yesterday was a good day in the portfolio. I did some management on Pfizer. I'm looking for some maybe buy calls or not some buy calls, some actual some buy right strategies where I buy shares and put on a covered call for a couple of things. But let's do this. So yesterday, I know Frank and I came on. I didn't really get a chance to do much analysis yesterday. So yep, I see Sean's asking for Nvidia. Where'd you put a stop loss on the SPY? So if you're long the SPY, and I don't know if you're long at support yesterday, that's a great trade. If I started anything long in the SPY yesterday, I'd have a stop loss in profit and break even and just see if this thing wants to rip and pause and rip and pause. Look, we all know what's coming next week, right? Fed's coming out next week. They're likely going to cut rates 25 basis points. I think this market is overly excited, but I don't think the market really has what it takes to blow through the top. Now, I could be dead wrong, but you know what's going to happen next week? The Fed's going to cut by 25 basis points, and they're going to try to be firm on why they're only cutting by 25 basis points. So this is going to be like a slow, steady Fed, so they say. Now the market's pricing in something different, right? I mean, if you look at the Fed Watch tool, we're still at a super high probability that we're going to do a 25 basis points cut next week. Now, if you don't realize it, this is a very good thing, because cutting by 25 basis points means that the Fed, and I think they got really lucky here, okay? Because the employment stuff is a real concern. It's showing a massive slowdown. It's showing the trends are going in the wrong direction for the employment stuff. But inflation is a little bit better, right? The year over year dipped a big way, but you can thank oil for that. Oil's down 20+%. That's a big contributor to why CPI is lower. Okay. Shelter's still lagging. Shelter's still sticky. That's why we had that slight uptick month over month. But the CPI year over year was down in a big way, 2.9 previous to 2.5. Today's PPI was slightly higher. If you look at the news from the screen, it's slightly higher. But my point is, cutting by 25 basis points, that's the Fed getting pretty darn lucky. And the reason why I think they're lucky is because if they were to go in and do an emergency cut at 50 basis points to appease the market, it's really just showing that they miscalculated, they're behind the curve, and they're trying to play catch up with a slowing economy. Now it's crazy how it's that sensitive. But I think the Fed is lucky that they can cut by 25 basis points, and then the narrative can be, we think that this is appropriate and we think this is fine. We're going to continue to watch data, data trends, blah, 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 blah. They can stick to the same narrative and the market can take it for what it's worth. But the Fed is going to cut rates. Okay. They're going to cut rates, and out to the end of December, the market's anticipating a pretty big dose of rate cuts. And even for the rest of the year, 25 basis points in September, November's highest probability is that we're going to have another 25 to 50 basis points. Okay. So this is pretty much a split right now. And it's either a 25 basis points cut or it's a 50 basis points cut. It's about 50-50. But this does tell us that the Fed's cutting, and then December, the Fed is probably cutting again. So the cuts are starting, and this is pretty aggressive, because usually it would be like a September, December only. If they're going to cut September, November, December, it's pretty aggressive. And what's interesting here is look at the, where's the probabilities? You can see there's a jump here, right? We go from September to November, the probability jumps. Okay, that the higher probability right now is edging towards a 50 basis points cut in November, and then another 25 in December. But I think you could maybe flip those. It could be, either way. I feel like by the end of the year, right now, the probability show that the Fed's going to be cutting by at least 1% by the end of the year. That's pretty substantial, right? That does a lot of things for this market. Okay, yields drop, bonds go up, possibly, right? And if the bonds already price this stuff in, so be it. But, is this a buy the rumor, sell the news, where now we know it's official, the Fed's going to cut? They didn't, the market's not getting overly worried. And so I think that's what really was the good thing yesterday, was like the market's like, okay, we can breathe a sigh of relief on inflation. We'll deal with the employment stuff as it comes in over the next 30 to 45 days. But the Fed's going to cut rates and continue to, kind of start that process. So anyway, it's going to be interesting to see where we're at. I think all-time highs might be a little challenging. I did put in a broken butterfly pending order, but based on my broken wing butterfly decision yesterday, that one sucked. So I don't really want to put that trade in here. September 19th, that's next Friday. 20,000. Let me go back to let me go NDX. I don't think this is at the all-time highs. Son of a gun. I'm going to cancel that trade. I got burned yesterday trying to call that top. I don't want to get burned, next week calling that top, because that is, the max loss at $1,500 because I'm taking on such a massive credit. I guess it's not that big of a deal, but could the NASDAQ rip over the next week? Could it rip up 3%? You bet, because we just saw it from this yesterday's candle alone. It's already up 4.25. So it can absolutely go and test that high. So for me, this is probably the better trade. So I'm going to cancel this position because I don't want to call the top right there. I'm not going to. So I'm going to cancel that trade. And that means in my alert section as well, I'm going to go into, this would be, I'm guessing, index trades. Yep. So I have a 9. Yeah. So this is it's in my alert section here. So this trade, I'm going to update this right now and cancel this order. Okay. So this is going to be edit message, update, September 12. I am canceling this order. Effective immediately. So it didn't fill. All right. And I'm fine with it not filling. I'm fine with just getting out of the trade. So let me see if I can throw in a little sticker here that shows cancel. There we go. So I'm going to cancel that trade because I don't want to call the top on the NDX. All right. If this thing rips another 3 to 4%, that trade's going to bust me up by another $1,500. And I'd rather, go with the flow. If this thing's going to push, I'd rather be bullish and doing bull put spreads. That's way easier. All right. All right. So I'm going to go in here and cancel. This is working, so I can cancel. And just give me about 30 seconds to knock these out in everyone's account. So cancel. Okay, I'll take a look at Apple. I'll look at the indexes. Yep, I'll go through some analysis here. Okay, cancel. Cancel. And cancel. All right, so those are all cleared. Make sure it's not in this account. Okay, we're good. All right, moving on. So let's have a look. Let's just go top down. So SPX, not a huge surprise that we're sitting here right at resistance. So this look, the market covered a lot of ground yesterday, but let me just throw a question out there for everybody. Okay. If this was the sell off from Tuesday, right after Labor Day, and we broke this structure and we stall right here, is anybody super surprised by that right now? So we just covered a lot of ground yesterday, but we ran right into resistance. So I wouldn't be surprised if next week we're sitting right here during the Fed or coming into the Fed meeting. Why? Because the Fed could give us the catalyst to go up or the catalyst to go down. And it's not going to be instantly on Wednesday, but I'm saying this is the direction I'd be looking for. The market's going to be looking for some type of catalyst to move, and we could be right here like perfectly balanced. And it's amazing how the market does this stuff. So we happened just to get back to equilibrium yesterday, but if the market's sitting right here going into the Fed next week, okay, well, the highs are right there to go after, and then we can also revisit the lows if the Fed says something that the market doesn't love. And what would that be? Maybe that they're going to, maybe scale back the pace of their rate cuts, and maybe things change for November and December. I have no idea. But the likelihood of a rate cut for next week, Wednesday, is pretty much baked in. The market's been toying with the idea all year of pricing it all in, and then we're finally there where it's like, it's here. So that buy the rumor, sell the news is very much a thing. And anyway, we're right back at resistance. So this structure, it's right there. If we are up higher than that, if we're up higher than that, then I would say, sure, any pullback is looking good for a dip to see if we can retest the highs. But don't be surprised if this market doesn't really do much justice to break the highs. I could see it testing and then failing. Okay. I could also see the market testing, right, and then pulling back again, but then still having a chance to go higher, low, higher, low, higher, low. And then we're just talking about continuation and resumption to the upside. But maybe this ends up giving us a rising wedge later. But right now, this, until proven otherwise, the bias is stops are going to be sitting right here, and we're going to see if this market can hang on to yesterday's rip. Yesterday's bullish move was so aggressive that I think it cleared out a lot of sellers, right? Meaning the market doesn't look very bearish right now, okay? But if price proves otherwise, then we'll have that conversation. But right now, I'd say I'm leaning towards upside for right now. I'm going to see what price does. Right, so that's the SPY SPX combo there. I do NDX next. The other thing on NDX would be right in there. So is the NASDAQ able to, challenge that high? Maybe. But if we also come right back into resistance, we have this cluster and that becomes resistance, we could also see the NASDAQ turn. And this might become like a perfect channel where we have like high to low. We have it in here, but it ends up washing itself back down. If for some reason price provides that type of support or that materializes, then I flip, right? But if price is up here in open space, then it's bullish. and it's looking to be bullish, and we're targeting all-time highs again. The nice thing is if we see it, you know, if price is up here, then we have stop losses or tighter stop losses. We go after all-time highs. There's at least a place to measure that move, and there's some gains. So, you know, being bullish to that high makes sense. All right. But we're going to see how we can kind of survive the month of September. Right. So Qs, very similar to that. Let's go here on the Qs. Trend line that I'll be watching for. That's micro futures. The Dow. This is my outlook on the Dow. We're making higher lows and higher highs. We're kind of choppy in the middle. I'm looking for the Dow. In fact, I might look at something right here at this low or this low. Let me put on, let's see, that's 385. I'm going to look at like a 385 by 380. I'm going to do this. Put in a DIA trade. So if I go out, I'm going to go out about 64 days. And on the DIA, I'm going to do a 385 by 380. And I'm going to try to get filled for $2. Yep, I'm going to try to get filled for $2. So I'm going to go after a little income play here. So let's go $600 income, $2 credit. 385 by 380 for November 15th. And place. Okay. So I'm going to clone this trade. What is this one? 365 by 360. Ratio spread, that still didn't fill. Okay, so this one is 9732. Okay. All right, I'm going to get this placed here. Similar. Okay, and last one, similar there. Okay, so that is pending. Let me get that in for my tracker. I'll put that in the alert section. DIA, this is, what was that expiration? November something? November 15th. Okay. 385 by 380. Okay, and we have $600 profit for a $900 risk. I'm going after 3 contracts, but one contract is $200 profit for $300 risk. Oops. Okay, so that's going to be a DIA trade. 385. Sell put, 380 buy put. $2 credit pending. Down here, and I'll put in a little trend line. Basically, I'll just box this in. So from 385 down to 380. Right there. Cool. All right, I'll come back to that trade. So that's the Dow. Let's go to the Russell. Similar to the Russell, you know, rate cuts are probably a good thing. Actually, I think the Russell is good enough now that I'm going to see if I can take a trade. This would be 200. I'm going to see if I can get a slightly better fill on the IWM. Let's go out similar expiration November. Okay, what's the 200? 200 by 195. I can get $1 for it right now. I'm going to see if I can get same thing, $2 on this trade. I might be able to get more than that, but if I do a 200, 204. I can probably go a little bit tighter. That's a bit tighter though. So if I did like a 204 by 200, so get 30 cents on the dollar. That's fine. A third of the width is fine. That's a 65% chance of profit right now. I'd like to move this down towards 200. I like this trade. I'm going to do this. 200 by 195. Put in $2. Go after 3 contracts and just take it as a credit spread. So, all right, I'm going to do the same thing there with the IWM. That would be down here. So $200 to a 195. There. And just see if this market maintains like higher highs and higher lows. Now, if price goes higher, then I'm not going to get filled on that trade. So what I'm looking for is if there's any way that price comes back down here to test this level and then find support, then that's how the trade, looks pretty good. So I could see support being anywhere between this $200 low and this 190 low. That's really where I'm watching to see if this thing bounces. If we're going to see higher highs and higher lows for the small caps. Okay. VIX. Sorry to hear that Frank's trade's probably not going too well right now with that big decline yesterday in the VIX. My SPXY is doing fine still. I own the shares at 40. I've got a bunch of puts at 35 and 50. US oil had a decent bounce here the last couple of days. Pretty good support. I did get filled at a 65.50 put on CL. So right in here, I'm looking for that trade to just stay above 65.50. If we go to gold, what's happening, gold? Gold is looking good once again. All right. Well, that just means that take a look at some GS or GC rather. GC currently up $900, $5,600. And copper's up $1,200. My silver trade's up $3,300 and $2,800. So yeah, some GC is looking pretty good. My GLD should be up a decent chunk. GLD is up about $9,000. So yeah, I've got some good profit running on gold. I still am not in love with buying these freaking highs, really. Okay, I'm not in love with buying highs on gold. But if anybody was in the trenches here and trying to buy it, or buying it in here with a stop loss right below these lows, then you're getting paid right now, which you're probably pretty happy. So what would be interesting on gold is if we have a breakout and a pullback and then another run higher. We could just keep melting up on gold. One thing I want to look at for a workspace. Let's go this one. Let's go this one. And let's take a look at gold. Because we are going to see some overstretched conditions. Let me see here. So one thing I'm noticing, RSI, so we are making slightly higher highs. So I have some MACD divergence. Okay, we're making higher highs in price. We're making lower highs with volume and momentum, right? Lower high in volume and momentum. Our relative strength from these highs also showing some divergence. So this doesn't mean a top is coming in gold. It just means that we could probably see at least a pause or maybe a pullback. I'm fine with a pullback, right? We have not hit the 200 EMA in a while. This is similar to the S&P, by the way, where this measurement on gold is around 235 bars. It's a little overstretched, so I'm not looking for like this massive pullback, but if price just hangs out for a little bit, right? If price is I don't know, if it goes sideways enough or maybe has a little pullback, allows the 200 EMA to catch up to it, then you're looking at support to just kind of hold dynamically, I don't know. So it's a nice little short-term breakout, but I'm seeing some overextended conditions. I just want everyone to be aware of that. It's not just, and look, if it keeps going higher, here's where I'm saying I'm going to close gold positions. Okay. If I'm long on gold, I'm going to get out of gold positions when it's doing this type of stuff. It's going to be like a rocket that looks like it is so irrational that it's a broken chart. It's going to be like a Bitcoin rally. It's going to be like a cocoa rally. It's going to be like a lumbers rally. It's going to be like freaking Nvidia for all I know. If it looks like that, then I'm just going to move. And this is perfect out of like Nick's playbook. Take a stop loss, let it makes new highs, move it. Makes new highs, move it. Makes new highs, move it. And just trail. Okay. If it gets ridiculously aggressively bullish and becomes a, capitulation move that just looks broken, trailing that, getting out, locking in profit, that's probably the best thing you can do. All right. So that's my thoughts on gold. All right. Silver. Silver also looking pretty darn good. One of my favorite positions, showed that here. So SI sitting up around 3,300 and 2,900. So I got a few bucks on silver. Then my SLV position is right here. SLV's up around $34,000. So pretty good with that. And this is one of my like bigger built positions. MO is another one. MO is up for me around $81,000, and silver is up $34,000. Those are pretty good. I like those trades a lot, and silver hopefully has a lot more upside. I'm looking for at least a move towards 35. I don't mind doing some more like kind of piling in on gold or gold and silver, probably silver, honestly. So let me see here what I have for some SI trades. So I know I have some future spreads in here. So I've got December expiration, January expiration. Maybe I can go a little bit more near term. September expiration, November expiration. So I guess I can sprinkle in some Octobers. Let me do an October trade here. $26 on silver. See what I can get for October. Let me go to SI. So we have an October 28th expiration, 45 days out. I'm going to try to get my $26 level. It's kind of my line in the sand. So let's see if I can get some decent credit here. So 26 by 25.50. Ugh. That's gross. So I can make $100 to risk $1,100. No thanks. Let me see if I can do another. There's kind of a unique trade I can put on silver here. Let me try this. If I do a 26 by 25.50, and then I look to finance that 35 cents. If I do the $24 and two of them, and that's a lot of buying power. Fudge muffin. Let me see if I can offset that. I don't know. I'm gonna have to buy like an out of the money put. No, that sucks. Well, maybe what I can do is just sell a put. That's only 125 bucks. Good lord. 560. All right, this is a little bit more. This is fair. So with the 50 multiplier, I get like a $560 profit, but I got to hedge this thing because I don't want to tie up 10 grand. So let me go 26 and then buy a 21. And then see if I can increase that 21 a little bit. So 98 cents. So if I go, let me see what this is going to pay. So I make about $500 income on this trade. Buy power is 23.97. All right. If silver had a vol event, I mean, 24 is out of the way. I like that support level. I think I'm going to take this trade. I don't mind this. $24 and then 21 as a put. So I'd be -1 +4. That way it's hedged. I'd have about $500 of income. I'm hedged to the downside, but it's just an income play. If this goes higher, then this decays, right? And then this would be worthless, but this gives me my income, and I'll still make about 500 bucks by October. I like that. Okay. So I'm gonna get, so I've got IWM and SI for October. I'm gonna write those down. I want to get those trades prepped and ready. Let's talk Bitcoin for a moment. 57. I mean, Bitcoin is looking good for accumulation. I think you just got to be patient. I've got another workspace here. I'm going to switch this one around, close that. And I've got another workspace here. This one is this guy. Let's go to Bitcoin. Okay, so this actually shows some really good liquidity levels on Bitcoin. And can everyone notice which one stands out? That it kind of switched on me, but I was looking for something in the 40s. Let me see if this will update. If not, I can go to the weekly chart. Okay, so I guess Bitcoin's going to go down to $10,000, which it could. No, I'm just kidding. I don't think we're heading there. I was looking for something right here. This is a good snapshot. So this volume profile indicator, I don't know why it's switching like that, but I had a big meaty chunk of volume and liquidity out here around 40,000. And so look, right now we're making lower highs in Bitcoin. Okay, but it still looks like a channel and it's still pretty darn efficient. I mean, this is a good looking chart for Bitcoin to just sit here and allow some accumulation. And at some point, what we're really looking for, there's two ways to trade this. Either you're trying to catch the bottom and get the best possible entry, and there's all these levels of dollar cost average into it, which is probably what a lot of Bitcoin enthusiasts are doing. But the bigger trade, in my opinion, is I'm hoping that price does something along this line. Okay. I'm hoping that price from this high to lower high, if we go another lower high, I'm looking to see when this structure breaks and then start to position for another run to retest all-time highs and then see if that's enough to actually justify a breakout. Because what I could see happening here from a technical side is this is creating a lot of resistance at these highs. Okay. And so if we go down and down and down and down, eventually when the structure breaks, I want to see if we can spot a bullish pattern, carve out a low. We can trade this area where I'd like to be long on Bitcoin for speculation plays, right? And maybe protect some profit in here, some long calls, some income plays. You can trade Bitcoin futures, something along those lines. And I'll probably do that. And then I want to see if the bigger picture looks like this. And I'm just going to use this huge line. If it was, okay, now we have this type of look where there's a massive head and shoulders or massive bullish pattern, and then longer term, we've got upside on Bitcoin. So it's big picture trading, obviously, but maybe it's out there for the next 6 to 12 months. But I'm just curious what price action does. It wouldn't surprise me if we did that, because it would be everyone gets all excited and then price hits resistance, falls back into all of this same structure. But then that gives like good traders a chance to accumulate more. That gives buyers a chance to really, nail this potential home run to the upside. And I wouldn't be surprised if a trade like this has a swing that somehow gets us to like 100K or 125K. So anyway, that's Bitcoin. Okay. MicroStrategy, that's essentially like trading Bitcoin. I got a bunch of credit spreads and ratio spreads in that one. Plus, they did a 10-for-1 split. So I was happy that they did that. So it allowed me to be willing to say, look, I'll take MicroStrategy. I'm also looking at, I'm exploring like which stocks I'd be interested in owning, because there are companies that are looking to put Bitcoin on their balance sheets, similar to what MicroStrategy is doing. And whether it's the best idea or the worst idea, or it doesn't really matter, I think it's an interesting play, because this chart, if I'm long Bitcoin, I'm long MicroStrategy. So MicroStrategy is great, but there's a couple other ones that, maybe I don't know, it depends, but it's got to be a company that actually does something, not just like, oh, they have Bitcoin, they're awesome. Maybe not. So there could be some other ones out there that I'm trying to research right now. Ethereum is struggling a little bit. I have some credit spreads on this one. This is EETH, one of the ETFs that I trade that has options. And so I'm looking to see if we have a high, lower high. Again, if this structure were to break or this structure were to break, Ethereum is pretty straightforward. We have this support becoming resistance. If this low can hold, I'd like to see this obviously get back above this level and go higher right there. So I'm looking to see if Ethereum can come back up and retest the highs. Okay. If it continues to go lower, I'm just going to watch, right? I'm just going to watch and see this low. If we go a little bit lower, then I'm just going to wait for this structure to then give me a chance to turn. I'll probably trade some more credit spreads. I might get long the EETH because it'd be cheap enough to maybe take a spec play where I can buy it here, stop loss below, and then see if this wants to run. So between Ethereum itself, Ethereum futures, and EETH, that'd be an ETF that I can trade. Okay. All right. Let's see. 6J is the futures market for the Japanese yen. We did breach these highs yesterday, actually, but you can see the retreat off the same levels. Look, don't be surprised if you're watching the Nikkei and watching the Japanese yen. You just have a lot of volatility. So we had that huge run during that July bottom and that August 5th top, essentially, on the Japanese yen, but the bottom in the stock market. I wouldn't be surprised if we have a lot of this going on. Okay. And so I'm not really that interested in trading it right now. Would I look at like a bear call spread on futures? Maybe. maybe for the next. I mean, I read last night that Bank of Japan is looking at possibly raising the rates up to 1%. I mean, that's not great for this whole carry trade situation. That's not great for what's been notoriously like the most radical dovish bank in the world. That if we're starting to normalize with other banks, but they've had a bit of an inflation flare up, and they're trying to also bring that back down, just like everybody else did the last couple of years. Okay. All right. So anyway, let me take a look at this right here. 0071. I'm going to take a look at 6J right now. So 6J is Japanese yen futures. So the nearest contract I have is October 4th, which is out 22 days. And I'm pretty sure that next week with the Fed, we do have Bank of Japan as well. Probably not the best trade for me to be watching, but I want to just price one out and see with yesterday's high, 0.0071, 0071. If I did a call spread, I can define the risk and make 137 bucks, risk 175. If I am right, it's a little income play. All I need price to do is stay here. That's it. If price stays there, then it's an income play. I could see that happening. If we were to fall back down, then that gets paid. If we come back down to this level, I'm probably looking at bull put spreads on 6J. So this means Japanese yen gets stronger. That means risk off trading as well. I don't know. The markets yesterday seem to be a little bit very risk appetite focused, but I don't know. I'll come back to this trade. I kind of hate the yen enough where I'm like, I'm stupid for even thinking about this. The Nikkei, we are heading up. Again, I don't think the Nikkei is going to do any real stretches to these highs or lows. I think the Nikkei is just going to do this. It's going to fumble around a little bit here. I know Nick is short on the Nikkei. And I think from up here, I mean, the Nikkei probably has room to sell off, but I'd like to see if we can actually come and test the lows. But the ramifications for that trade is this is risk off trading. If we have a stronger Nikkei, or I'm sorry, a weaker Nikkei and a stronger Japanese yen, that's risk off trading, which will probably bleed into the US market, which I said this earlier this week, and I've said this for the last couple of weeks. If you're watching a 200 exponential moving average, and that's on my workspace here, on the S&P, I still think that level can be tested. Okay. So, and this isn't me saying that we have to have a top, but if this market struggles to break highs, I mean, I don't know if September is just going to be more of this. Maybe September is here and here. Okay. Or September is like that. And we just go sideways. We get a little bit more narrow. And then we look to see, like, as we come into the election, well, there's a possibility and there's a possibility. Now, I'd say this is the higher probability because that's what the market likes to do and finds a way to rip through the end of the season. But if we break down, that's obviously going to scare the pants out of everybody because that reality could be pretty nasty. That we've capped out, But with the Fed going more dovish, there's going to be fiscal spending like freaking crazy with a new president, new administration, whatever it is. It doesn't matter. There's no such thing as austerity, right? We are a debt society. We're a debt country. We grow by debt, and it's a problem. But fiscal spending is still going to happen. Whether it's Trump, whether it's Harris, it doesn't matter. Both sides are going to spend a ton of money. And if you don't realize it, that's what's kept this thing post-COVID afloat, right? The market, the bear market we saw in 2022, fiscal spending got us out of that. And then the AI stuff and the Mag 7 that was like kind of, latched onto by the markets, that was the theme. But fiscal spending was just putting so much money in the system that it helped to sustain this bull market. So here we are again, like you're going to see more fiscal spending. So it's hard to be super bearish. It really is. Now, I think corrections are great. I think corrections will be awesome, but it's hard to be super bearish. So I'm certainly more of the camp that this thing, whatever it looks like, whatever we have structure wise, I can see some indecision, but I can see this market just making its way up, trying to grind higher. And that destination would be 6,000, right? 6,000 on the S&P would be the destination. So I'm kind of keeping that in the back of my mind as a target. By the way, hey, James Chandler, do we have somebody coming on? Am I running late for Nick? Is he behind me? Let me know if you need to Sandman me and pull me off the stage. No one else. Okay. No one else. Just kidding. All right. Let's take some more requests. I'll get into some currencies here. I did oil, gold, silver, did Bitcoin. We got some Mag 7s. Everything ripped yesterday. 30-year mortgage down to 6.35. My bond prices are doing pretty well. I'd like to see my TLT get up. I'm going to put in 6J as well. IWM, SI, 6J, maybe on the 6J. And then I will go into TLT. TLT's up around 12,000 bucks right now, and hopefully there's more to come because I'd like to see my symmetry level hit. This is probably not the best chart for that. Here's my symmetry level on TLT. Or yet. There. So this is how I'm measuring it. We have a nice swing from low to high. Oops, what the heck? Hopefully I didn't mess that up. And then a higher low to higher high. So that's my symmetry play on TLT. Now, I'd love it to go higher. There's obviously a lot of resistance over here around the 108 to 110 handle. But I'm happy. I've got a 103 sell call against it's a diagonal spread. So I've got an 82 long and a 103 short that's creating my 21 point wide credit that I can max out at. So I've lowered the cost basis down to like 11 and change, and I'm hopefully going to close out about $3,000 or $4,000 per contract, and see if that hits my symmetry at 103. But 105 is my target actually. Okay. How will the Fed affect the pound dollar, euro dollar next week? What's your prediction? Let's talk about that. Yep. Thought about the election. What it means tomorrow? It doesn't freaking matter. I don't think it matters. Okay. Look, the election, the market doesn't care about the election. Okay. The market cares about policy. That's really all that matters. So if Trump wins, the one thing that would be the most impactful for the election as far as how the markets are going to take it would be, I think a Donald Trump victory could potentially mean like a Republican sweep. And that means that Congress and Senate and president would be Republican. That policy regime would be what causes the market to move the most, right? I would guess it'd be favorable, but also inflationary because we're going to have tariffs. We're probably going to have more deglobalization. These are probably way more inflationary pressures in the peripheral. Harris is probably more of the same. And I don't know if that's good or bad. Everyone seems to complain about it, but we're sitting here at all-time highs. The markets are up. The Fed's doing its thing. So you tell me. I mean, it's certainly, it feels crappy out there post-COVID. It's not the same. There's a K-shaped recovery where a lot of people are recovering and they're loving it because they've been asset holders forever, and then others that aren't are behind and things are more expensive, life's more expensive, and it freaking sucks. So all I'm saying is, unless there's a sweep where the president is also impacting a full-on a policy shift where it's going to be like this, like absolute power for one side or the other, I think that's what the market's going to take into play. So if it's a gridlock situation where Trump becomes president, but we have, Democrat House, Republican Senate, or vice versa, it's still gridlock. Same thing for Harris. If we have gridlock anything, it's going to be more of the same. But both candidates and both administrations, likely fiscal policy is a standard. Fiscal policy to the upside, adding more stimulus, it's probably going to happen either way. So that in turn would be good for assets like the stock market. A weaker dollar, a weaker Fed, a dovish central bank, along with other central banks cutting rates. That's probably good for gold and alternatives. I like gold and silver a lot. I like Bitcoin a lot for that reason. Commodities, if we have a weaker dollar, that tends to help. The one thing that really needs to figure itself out would be oil. I mean, global demand has been terribly low and China's been quiet and the US is producing oil at record levels. And I really think the big contributor to that 2.5 CPI print from yesterday was oil dropping 20+% in the last couple months. That's a huge factor. Okay. So some currency pairs, how does it affect? I mean, we do have next week, we do have a lot of central banks. So the ECB, by the way, just cut rates today by 60 basis points, right? So did that do anything to the euro today? I need to go currency strength chart. Let me make sure. Okay, I'm good. I thought I had, webinar is fine. So today we have a weaker Swiss, good. We have a weaker yen, good. Baseline dollar, pound is up, euro's a little bit higher. So even with the rate cut decision, euro's a little bit higher. Okay, so be it. Aussie, New Zealand up there a little bit. Pretty quiet on the Forex side for volatility. What was yesterday, by the way? Yeah, this was yesterday. Crazy week Swiss, which I'm super happy about. And also the yen was just all over the place yesterday. That's wild. Anyway, so as far as the impact, I mean, next week we do also have the Bank of England, if I'm not mistaken. So we've got the Fed on Wednesday, okay, which they're expecting the 25 basis points cut. Hooray. And then we have the Bank of England on Thursday. I don't see a forecast here, but I'm curious if they're also projecting a cut. Okay. I don't think that the pound dollar is going to be like a carry trade necessarily. I think the best thing to watch is going to be the dollar. We also have the Bank of Japan next week as well. I don't think they're going to raise rates. Okay. But man, they could be really disruptive if they do. If they slip in a 25 basis points hike or like even a 0.1% hike, I don't think this is going to be the case. But if they did, I think that would be a huge surprise for the market, because nowhere have I heard that as the plan for the BOJ. Although they are saying that whatever their timeline is, they're looking at being ultimately around 1%. But their timeline could be infinity. For a decade, they literally held rates at 0% or negative interest rates. And that's their timeline. So there's no time to really understand like what the BOJ is going to do until they do it. So that's why I hate the Bank of Japan and I hate the Japanese yen. Love the country, love the culture, but hate their currency. It is a beast to trade. So I don't know, but that's all next week. So there's a lot of volatility next week. The dollar, the pound, the euro just cut rates today. It's sprinkled in there. The Swiss is also, I believe, the following week. The Swiss National Bank is also having another rate decision for the end of the month. So I think when the dust settles in September, I go back to this chart here. What's the dollar doing? To me, the dollar has a really strong case for some support technically. That's really it. If I'm making a pretty simple trade right now, I'm long the dollar with a stop loss below, and I'm looking to see if this wants to pull back into this midpoint range. I'm looking to see if this wants to pull back into maybe this trend line area. But you can see like reward to risk, it's a little favorable. And then if it keeps going, it's really favorable. But my stop is quick and painless. If we see a big move to the downside in the dollar, then you're trying to, chase this lower and high to low, lower high to lower low. You got symmetry and we see a weaker dollar. And I've said this for months now, if the dollar gets weaker, that's how all this goes higher. Stock market goes higher on a weaker dollar. So the dollar's really, I think, the magic puzzle piece here to figure out where the heck are we going with these currencies? Where the heck are we going with the stock market? Where are we going with gold and silver and Bitcoin and all these other assets that are tied to the dollar? All these things matter. Okay. All right. All right. Anything else for today? So what I'm going to be doing for the rest of my day, I'm going to be keeping a close eye on the old ES today. So there's 1, 2, 3. There's my analysis. We're still in the profit trap. Unfortunately, I need this to I just need this to chill out, like chill the heck out, and see if my P&L, like this orange line that's in my Tasty platform, I need to see if this orange line will end up getting more along the lines of my real P&L trade. And hopefully this will stay trapped and pinned. And I can turn this. It was about a $5 net debit between, I had both sides of the trade. So if I can turn this into, $15 like I did yesterday, I'm probably going to take some profit, or I'll learn my lesson and I'll move my stop loss, because I love the fact that thing traded near $23 yesterday. So if I can start trapping profits and move this thing up and get like $20 or better, I'll be really happy on that ES trade. Okay. All right. Thanks. I'll wrap it up there. And happy Thursday, everybody. And we'll see ya mañana. Okay, thanks. Take care. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.